Good evening, students. Welcome to the next online coaching classes organized by Board of Studies ICAI. Today evening, we are going to have a discussion on this paper called Tax Invoice, Debit Note, Credit Note, E-way bill under GST law. Before we start with, let us have the basic test check done. I need a confirmation from a couple of you with respect to this audio and visibility of the presentation. And hope everyone is doing great and everyone is safe. Things are not great outside, so better to stay where you are and better to have in a safer place. Take care of yourself. So let me have a couple of confirmation if you're able to hear the audio and also the video. By the way, the temperature is also not so great outside. Most of the members have been affected with either cold, cough, fever. So better take care of yourselves. Yes, Ramakrishnan. Thanks for the confirmation. Now, you might have been thinking, so what do we do with this particular topic called E-way bill under GST law, a tax invoice, debit note, credit note. Why is that? We have a separate session earmarked for these documents. We all know tax invoice is a tax invoice. Any reduction in value, I'll issue a credit note. Any increase in value, I'll issue a debit note. E-way bill, there is a document required for movement of goods. Now, this could be a common understanding what many of us have when we look at this particular topic. Even I'll give you a couple of reasons why we should learn this particular topic called documents under GST law, which is dealt with chapter 6 of your CGST rules. And also one finest topic under GST law called E-way bill. Just for your understanding, as on today in India, there are say 100 cases in a high court. Out of 100 cases, 80 cases, 80, are in connection with E-way bill related transactions. You can understand the gravity of the issue, right? E-way bill is one of the documentary requirement, which is also procedural compliance, which has got a very prominent role to do with the organization. Now, also a couple of you might have been thinking, so what is that we have to see a future from reading or understanding these particular provisions? I'll put it this way. You would have looked at your curriculum. You have been studying MAFA, you have been studying income tax, you have been studying your systems audit, you have been studying your costing, financial accounting, right? Now, look at from the organization point of view. Organization perspective, any deviation in a statutory compliance, there is a cost attached by way of penal provisions. Now, under indirect taxation, especially GST law, this has got a direct implication on the operations. In case of income tax, we always go to the bottom of the P&L, see from there we start the audit part. But in case of indirect taxation, all your operational issues have a prominent role to play. One mistake is good enough to take away the profit on a particular transaction. Keep in mind when you're reading indirect taxation, just don't read from your examination point of view. Just read, what if this is not done? What if this provision was not complied with? What would be the exposure? Look from that particular angle. Now, E-way bill, what we are going to study, take a note, May 2022 and November 2022, May 2022, November 2022, you will have short couple of questions tested in relation to E-way bill. For the reason, there is a complete revamp in the E-way bill related provisions with effect from 1st Jan 2022. So this is not going to be tested for your May 22. It is going to be tested from next item, that is May 23. So this existing provisions, because it's a sunset provision, Expect one question from this topic on e-way bill under GST law, right? So as I say, there is a cost attached to your operations. For that point of view, I would recommend understand the gravity of the issue, and then let's move ahead to understand why we need to study this particular subject. To the extent possible, I'll not make it too theoretical. I'll make it more practical. I'll give practical examples for you to understand. When we read a particular provision, where we come across in our regular audit, where assuming you take a in charge as a CFO, as a CEO of an organization down the line, once you get qualified, there are a couple of aspects where you need to focus from audit perspective. That is the area where I'll come with the practical examples as I discuss with these provisions. To start with, we will discuss on something called tax invoice. We will also have a discussion on various forms like your bill of supply, receipt voucher, self-tax invoice, ISD document, ISD invoice, delivery challan. So these are the couple of documents we use in our day-to-day business operations. And then debit note, credit note. Finally, we will touch upon a couple of provisions connected with e-way bill and e-invoice. Last two legs of this slide are very, very important. For this particular item, expect one question connected with your e-invoice and e-way bill provisions. Reason, with effect from 1st April 2021, e-invoice provisions are made effective for assessee, for a registered person whose aggregate turnover exceeds 50 crores. So from that particular perspective, when I go to the respective slides, I'll give you practical examples to understand what we have to learn from these particular topics. Now, I was talking about these particular documents, what are important and why we have to give so much of importance to these documents. Let me come back to my Excel file to throw some light on why we have to talk about these documents. Tax invoice, debit note, credit note, self-tax invoice, then you have ISD invoice, a delivery challan. Also something called bill of supply. Now, I'll give an example. When you are reading these particular provisions, see, most of the time, we as a professional chartered accountant, we run on last minute requirements, especially on working capital matters, working capital related issues. I'll give an example. So there is a transaction which took place on 28th of December 2021. And we are on, say, today, 11th Jan 2022. A coincidental due date for filing my GSTR 1. Now, 28th December 2021, say there is a transaction. What is that? Supply on approval basis, where 4.5 lakh is a tax. Assuming that there is a client called, like you are into a manufacturing activity, you have supplied goods worth some 80 lakhs to a customer called, say, Tata Motors. These goods which have been supplied on 28th December, it reached on, say, I'll give an example of OEM, original equipment manufacturer. I'll give an example of this. It is just a hypothetical example. I'm using this brand name just to connect with the topic. Say Tata Motors is my customer. Now, for OEM, all of you would have been experienced that when the goods have to be supplied, there is something called just in time. So there will be a schedule on a daily basis based on which I supply the material to my customer. Assuming for a minute, Tata Motors is in Gujarat. Their plant is in Gujarat. I, being a supplier, I'll put myself, say, Mrs. ABC Private Limited. Say my operations are based in Tamil Nadu, Chennai. Now, 28th December happens to be a Tuesday. I have to ship material from Chennai to Gujarat. Now, my Tata Motors gave a requirement on 1st Jan 2022 for consignment worth, say 80 lakhs, where tax applicable is rupees 4.5 lakh. This is a hypothetical example for our understanding purpose. Now, when the truck has reached on 1st Jan, now understand, so when goods are dispatched on 28th December, my goods dispatched on 28th December. It reached my customer on 1st Jan 2022. There is a transit time. So it takes at least 2-3 working days for me to reach that particular point of destination. On reaching the destination, it so happened that one line item is missing. It's a practical issue. When you are into operations, you understand that truck reaches the customer place. On getting into the customer place, customer looks into the purchase order. They say, in purchase order, there are 32 line items. In the invoice, I have only 30 line items. There is one or other item which is missing. Now, Tata Motors say, look, you have to supply as per purchase order. If it is incomplete, I cannot partially close my purchase order. I have an instruction that I have to completely close my purchase order. So what happens? On 1st Jan 2022, my material were rejected by Tata Motors. And this material reached my factory on, say, 4th of Jan 2022. Now, you are the finance controller. You will be doing the planning activity for fund mobilization. Like if you typically see, first week of month, you have to pay salaries, you have to pay your regular operational expenses like rent or other regular recurring expenses. And also you need to make a forecast for the taxes which needs to be paid. Now, you got to know that there was a sale reported on 28th December for which I have to file GSTR1. Today, we are on 11th Jan 2022. My GSTR1, my GSTR1 for December 2022. December 21. My GSTR1 for December 2021, I have to file on or before 11th Jan 2022. I'm just giving an example for due date. Now, what you would recommend to the accountant? Assuming you are a finance controller, you are the CFO, would you advise to your accountant, do one thing, you raise a credit note because law permits me to issue a credit note. You raise a credit note dated, say, 31st December 2021. Raise a credit note and nullify the transaction. If I don't raise a credit note, I have an obligation to pay 4.5 lakh well in advance. Again, in the month of January, raise a credit note, again, get it back as a refund from the department. What would be your advice as a finance controller? Let me hear from a couple of you. Think, I'm making it more practical for the simple reason, you have to get connected with these particular topics. So what would be your advice? You have been looking into this transaction. So what would be your advice? Say, I'll pay 4.5 lakhs as my tax, or I would raise a credit note and then do a set off. What would I do? What would be your plan of action? Priya and Ramakrishna says audio is visible. Yes, thanks for the confirmation. Let me hear from you so that I can go ahead. You are going to be having a role to play in terms of taking a decision. So what would be your decision? Should I need to pay tax? Should I offset with a credit note? What would you advise? Okay. Venkat says raise a credit note, and Harish says don't raise a credit note, you account for invoice. Okay, I have a mix and match answer. But what would be the reason? Why is that you are recommending not to raise a credit note? Harish, what could be the reason? Huh. I have one more answer. Ramakrishnan says, anyway, okay, okay. Naveen Prakash says, cancel the invoice. Fantastic. I appreciate your answer. Naveen, hold on to your answer. We'll have a discussion on this particular point. I completely appreciate your thought process. Parallelly, Ramakrishna also says, the full order will be resent, hence we can raise a credit note only for the missed line item and pay the remaining GST. So Ramakrishnan says partially, anyway, see, out of 32 line items, 30 I have billed, only 2 line items I have to bill. So let me pay the tax and no, issue a credit note only for those 2 line items. And there is one more answer from Indrakshi where she says raise a credit note. Now I'll come back to one answer, fantastic answer. Naveen says cancel the invoice. Naveen says cancel the invoice. I truly appreciate this point, but let us look at this, Naveen. Cancellation of a invoice. Now, remember, I put myself into two theory. Theory 1, theory 2. Theory 1, theory 2. What is my theory 1? So I'm a honest taxpayer. And theory 2, I don't say, department says tax evading person. I'll put into two theories, honest taxpayer, tax evading person. Now, again, for benefit of other students, I'm just bringing this thought process of Naveen, a very, very useful thought process. For a moment, I have explained this transaction. On 28th December, I have to move the material from Chennai to Gujarat, a plant which is located in Gujarat. Now, I'll give you the facts for you to understand before we come into the decision. What are the facts? Point number 1, there is a material movement from factory. There is a material movement from factory. Second, there is a e-way bill issued for the above movement. Third, there is a truck, what I can say, freight invoice received from service provider. Top of that, there is a inventory movement in books. Now, visualize all this. Visualize all these aspects. I have evidence to say that material was dispatched. Now, when material was dispatched, do I have authority to cancel an invoice? When do I cancel an invoice? Can I just like that cancel invoice? Now, visualize, like, so when you look into your ERP, when you look into your systems audit point of view, there is a transaction. When I raise a tax invoice, my tax invoice gives the instruction to inventory module, pick so much of inventory from stores, put it to dispatch. From dispatch, let there be a freight allocation. There is a approval for movement of these goods by a truck. There is an approval received to stores supply chain management for booking of freight charges. Now, there is a trail which is built into my ERP. The moment I cancel my invoice, back end, my movement of goods from inventory to your stores, from stores, physical, which is gone outside, there is a mismatch. Now, topmost, 31st December 2021, stock taking. Assuming that you are an entity who close your books of accounts following the calendar year. You close your books of accounts following the calendar year. What would you say? What would you say? Will you call yourself a honest taxpayer, or will you get qualified as a tax evading person? Will you be quantified as a tax evading person? What would be the department view in terms of cancellation rather than doing an adjustment by way of a credit note? Naveen, I want you to answer. Along with Naveen, others also, please put a thought process how it is going to work out. Now, please imagine, please understand. I'm giving all these practical examples for the simple reason, whenever there is a department audit, it is not just my invoice, a credit note based on which they just look into the transactions and say, okay, Praveen did a fair job. He gave the sale register. Sale register was coming into GSTR1. He filed returns properly. Will the department admit, or for a moment, you step into the shoes of an internal auditor or a systems auditor? What would be your approach to present to the management for this particular transaction? Can I call myself as a tax complaint person or tax evading person? How it would be presented as? So I want your views, students, so that it will be more clear for us to take it through. Indrakshi says it will be considered as a tax evading person. Absolutely, no doubt on it. Now here there are certain transactions where there is a documentary evidence. Now, people who have affection, people who have interest towards the legal dispute related matters, I would say any matter which travels to litigation, your documentary evidence is substantial a piece of material which can win a case for you at any forum. So I'm just giving you a practical example where a transaction which is there, I as a CFO, I as a finance controller, when I have to do a fund management, I have to take a decision. Should I raise a credit note? If I have to raise a credit note, what does the law say? Can I raise a credit note on 31st December? Now, I'll come one step ahead now. Assuming that your books are closed on 31st December 2021. Now, I follow calendar year. If your statutory auditor happens to visit, they'll run through your sale register. In sale register, there was an invoice raised on 28th December, which was rejected by the customer on 1st Jan. So what they will do, they apply your provisions of AS 9. Accordingly, they'll ask you to reverse your revenue. Now there is a mismatch. Now GSTR1, I'll offer this as a revenue, but for the purpose of my accounts, this is not a revenue. So there is an excess revenue reported in GST returns. There's a less revenue in my books of accounts. Again, this calls for reconciliation issues when you prepare your annual returns. Now, these are a couple of topics which we need to keep in mind. Why at all we need to study these particular documents, why and how is it connected with my operational issues on day-to-day basis, how we need to understand. Students, hope you are clear with the basic backdrop why we need to study these documents under chapter 6 of CGST rules. Just keep in mind, if you have played this game called cards, this what you call rummy, a game of probability. Who will win based on the probability? It depends on who has got the big major cards. Trump of cards, the same way you as a CFO, you have to guide, you have to set in place your operational matters considering the law. So I have to know the law, then only I can tweak around with the law where I can be called as a honest taxpayer rather than being called as a tax evading person. I need to have a documentary evidence. I need to have a proper disclosure so that I cannot be contemplated with this allegation called tax evasion, right? This is a basic preamble I want to set forth. Moving on further, we know that a tax invoice is required when there is a supply. Now, supply I can have for goods, supply I can have for services. Now, while I'm talking through these provisions, I'll take you back through the basic provisions, what you have studied in your accounts and what we have studied in our supply section 7 and a couple of levy related provisions. To brush up your basics and also to connect the concepts, I'll take you through the practical aspects. So tax invoice, when I talk about, I have to issue invoice for goods, I have to issue invoice for services, right? Now, tax invoice for goods, tax invoice for services. If you recollect your accounting standard 9, which deals with your revenue recognition, in relation to goods, you know that there should be a sale of goods where compliance with your sale of goods act, read with your contract act, where my risk and responsibility, risk and rewards have been completely transferred, which is dealt in my accounting standard. Unfortunately, when I come to my GST law, unfortunately, this supply is read with section 7, where my goods is connected, my goods is interconnected with some concept called removal. My goods is connected with one more concept called removal or making available. Removal or goods made available. Now, while I talk through this provision, again, students, please, along with this session, I would recommend you to have a running notes, whatever the examples I'm giving, flowcharts, etc. Along with me, if you can make as a practice, it just gets registered in your memory. So for a healthy practice, I would recommend few examples, make a note. Examination, straight away, when you look at your running notes, you need not read this concept. Your institute material, whatever aspects are there. Now, frankly, when you look into this institute material, it's full of theory. Now, a person who doesn't have experience or exposure in indirect taxation would really not appreciate to read this 4 books which is there for GST. Rather, I'll make it more easy where you can connect with this concept and you can present in your examination. Please keep in mind, quoting a section number, quoting a rule reference, quoting a provision as is not expected from your examination. What is expected from your examination? A student should be in a position to understand the provision, apply the provision for the given case law. That's all. So let us go from that particular approach. Now, for the purpose of my GST law, I can raise an invoice when there is a removal. That means on or before or at the time of removal. Now, my GST law has no connection with your AS9. My GST law doesn't even look at your Sale of Goods Act. It simply says, whenever there is a movement of goods, when goods are to be taken out, either before removal or at the time of removal, raise a tax invoice. Now, question comes here. There was one example I have discussed when I was talking about section 12 with respect to time of supply. Section 12, which was dealing with your time of supply. Please recollect this concept. I gave an example. So there is a farmer who wants to buy a tractor. This farmer, when he wants to buy a tractor, the cost of the tractor is 8.5 lakh. Now, he doesn't have money. So you as an advisor, what you do? Go for a bank loan. You have a IT return file. So present your IT return and get a bank loan. Now, what does a banker say? Praveen, look, you want to buy a tractor. I can fund you. For 8.5 lakh, 75% I can fund you. Provided you own the goods. That means unless the invoice is there in your name, I as a banker, I don't have a authority to give money in advance. I cannot go to the showroom person and say, sir, I get a loan from the bank. I'm going to give my IT return and other documents. Kindly give me an invoice. Now, this is generally is what this discuss where they say, sir, you raise an invoice, I'll pay you 25% along with the tax, and within 10 days, I'll get the balance money and I'll take the tractor from your factory. Now, this is what generally happens. So for considering these provisions, I can raise an invoice before removal or at the time of removal. Now, just because before removal, you cannot use that as a window dressing transaction where to boost up my sales. Now, please understand this AS 21, when we deal with, there is something called consolidation. I have to make a healthy financial statements. For the purpose of healthy financial statements, I book all the sales which is due in the month of say April, May as sale in the month of March. That's the reason your auditors come and say, Praveen, you have to comply with your AS9. Now, that is a transaction which we're talking here. You want to raise an invoice and pay the taxes. Now, GST law permits before a removal. Please understand, AS9 has no connection with my GST law. So GST law permits me to raise an invoice before removal. Now, where there is a movement of goods. Where there is a movement of goods. Now, on the other hand, there is something else called bill to ship to, or something called what I can say, no movement. Now, bill to ship to transaction, material will never come to your factory. Again, please understand. This particular transaction, when I talk about bill to ship to, there is a very much possibility for the department to do an investigation, say, look, it is a invoice trading. There is a technical term called invoice trading. Now, what is an invoice trading? Invoice trading is a concept where from A, bill will go to B. From B, bill will go to C. From C, again the bill will go to D. Means a separate invoice. A will bill on B, B will bill on C, C will bill on D. Invoice is routed for 4 parties, 3 parties. There was no actual movement of goods. There was no rendition of services per se. This concept is called invoice trading. But, sir, is invoice trading legal? I would say invoice trading is illegal. So what is that I have to do, and what is it I have to protect in my GST law? In GST law, there is a concept called bill to ship to. Bill to ship to. I'll just explain this concept and I'll come back to this tax invoice. Let us take an example. Most of you, if you have done internal audit for this dealers who are dealing with FMCG products. Let us take an example called Sony Television. There is a manufacturing plant of Sony, say in Haryana. Haryana, there is a manufacturing plant. This particular Sony has got a dealer, retailer, end customer. Say there is a end customer called XYZ Private Limited. This is a company, which is a software company. This company wanted to buy 100 televisions. 100 televisions. So this particular entity placed order on a retailer. In turn, retailer will place an order on dealer. In turn, dealer will go back and place an order on manufacturer. Look at the back-to-back connection. When end customer places an order on retailer, retailer in turn places an order on dealer. Dealer in turn places an order on this manufacturer, right? Now, this is a back-to-back connection. Now, please visualize this transaction. From Haryana, assuming this end customer is in, say, I would say Bihar, Patna. From Haryana, the goods travel directly to Patna. Why? Transportation cost, inventory cost. Now, this is a bill to ship to model. A transaction takes place on, say, 30th December 2021. Now, when you do an audit, usually your internal audit happens after 3 months. Your tax audit happens after 6 to 9 months. Your GST audit happens 1 year down the line. So what is the document evidence you have for this dealer, for this retailer, to say that there is a sale from manufacturer to dealer, sale from dealer to retailer, sale from retailer to end customer? Now, visualize this transaction. I'll put it this way. Manufacturer to dealer, wholesale dealer. Wholesale dealer to retailer. Retailer to end customer. Now, please understand this concept of invoice trading from this example. Now, we are conducting audit on the basis of the documents available. Question comes here, ITC and output tax. Now, when manufacturer raise a bill on wholesale dealer can take an input tax credit. In turn, wholesale dealer will raise an invoice on retailer. Retailer will take an input tax credit of the bill raised by wholesale dealer, and in turn, retailer will raise a bill on end customer. Now, this is a transaction which has happened. 2 years down the line, department comes and says, boss, audit is happening at XYZ Private Limited. Say the audit is being done at XYZ Private Limited. The day when the audit authorities have come, there was no TV. There is no TV. They have purchased, they say in my fixed assets, they were purchase of TVs. So when they went around, hardly they could find some 30 to 38 televisions. Balance, they say, sir, it could be there, here and there. Some sort of explanation was given. Now, how do I convince my authorities with respect to this invoice trading? The answer for that, I'll come back to your section 7 read with section 31. So my section 31 deals with a transaction where there could be a bill to ship to transaction where I need to have a tax invoice. I need to have my accounts, that is inventory records, updated. I also need to have e-way bill transaction. And finally, if it is goods, availability of the goods. So if goods are discarded, if the goods are given to a charity, if the goods are given by way of a CSR activity, have a documentation where a delivery challan or a tax invoice is required, where in the entity called XYZ Private Limited. Now here, my GST law permits me to take a credit. But please understand, whenever we talk about bill to ship to transaction, we need to have a documentary evidence to say that there is a tax invoice, there is a e-way bill for material movement, the inventory records are properly updated. Finally, your assets which are there physically should be verified. If assets are not there, please use a document called delivery challan for sending out of the premises. Now, this is again another example connected with understanding the documents and the GST law. Coming back, bill to ship to we have understood. There is something called no movement of goods. We have discussed about an example while talking about section 12, where rented premises, where a DG set is used for power backup. So I am a software company. I have been operating in a rented premises. COVID March 2020 has hit badly, where in a building, say 4 floors are used by this software company. Because of COVID, not even 1 floor is being occupied because everyone is working from home. So I felt that 4 floors are not required for me. I just need only 1 floor. Landlord says, Praveen, if you don't want 4 floors, please vacate. Reason, I cannot lend you 1 floor and the rest 3 floors to another. I can lend all together. So when I'm vacating, there is something called DG set which is installed in the building. I'll ask the landlord, look, I've spent 10 lakhs on this DG set. I don't need this DG set. I cannot take it to the new premises also. Why don't you take? Now that could be a transaction where there is no movement of goods. Again, there I use this concept called tax invoice, where there is no movement of goods. So these are a couple of provisions which are connected with this tax invoice, where I use this concept for issuance of an invoice. Now, there are a couple of definitions. I skip those definitions for the brevity because we have discussed these definitions all along. I just draw your attention to read through the institute material for those definitions. And to come back, section 31, it talks about a registered person who supplies taxable goods shall issue a tax invoice. Now, I halt here to draw your attention to one point. Page number 10.4 of your institute material. You use your pencil. 10.4, section 31, subsection 1. It starts with a registered person. Circle the term registered person. Circle the term registered person. What it says, a registered person who supplies taxable goods, issue a tax invoice before or at the time of removal of the goods or delivery of goods or making available thereof. Now, here, the importance is placed on this term called registered person. Question comes here. So what do you mean by registered person? Sir, a transaction taken place after registration, I can call myself as a registered person. So what if a transaction takes place prior to my registration? Can I call myself as a registered person? Let me come to Excel to make you understand with this concept. Say, let's take an example that Mr. A commenced business on 1st Jan 2021. On 15th Jan 2021, there is a compliance as per section 24. What is section 24? In the last class we have discussed compulsory registration. Means this gentleman has executed an interstate transaction. By virtue of applying section 24, he has to register on 15 Jan 2021. But what happened? On say 31st May 2021, this gentleman approached his tax auditor for IT filing. So when this gentleman has gone to his chartered accountant's office for filing IT returns, then the CA advised, oh, Mr. A, you did a transaction on 15 Jan, which has called for the provisions of section 24, where you are supposed to register. So immediately asked, sir, I'm really so sorry. I am not aware. So what shall I do? Then there is a advice that go for registration. So registration applied on 1st June 2021. Now, there's a transaction which took place 15th April. I'll put it this way. Just give me a minute. I'll make a small diagram to make you understand. Yes. See, this is a period from 15th Jan 2021 till 31st May 2021. Now, assuming for this intervening period, he has a turnover of rupees, say 18 lakhs. Now, assuming the rate of tax is 18%, assuming the rate of tax is 18% on 18 lakh, this is my tax. Now, question to you students. This Mr. A applied registration on 1st June and authority sanctioned register RC on 15th June 2021. RC is effective from 1st June 2021. Now please understand carefully. A transaction is taking place from 15th Jan till 31st May. On the instruction of the auditor, the application for registration was filed on 1st June. The concerned jurisdictional authority sanctioned the registration on 15th June, effective from 1st June 2021. Now the question to you students, as on 15th Jan till 31st May, can I call Mr. A as a registered person? Yes or no? If your answer is yes, can this Mr. A collect a tax of 3,24,000 from his customers? If your answer is no, Mr. A is not a registered person, The question comes to you. The question comes to you. Does the authority, the GST officers, have a right to recover 3,24,000 from Mr. A when he's not a registered person? Question is, when he's not a registered person, when he's not a registered person, no tax invoice. Question comes. So when I don't issue a tax invoice, can the tax be collected? For 3.24 lakh. Give your answers. Let me have your answers. Then we'll come back to our section 31 to understand this importance of term called registered person. So you can give your answers with respect to the question. First question, whether Mr. A for the period 15 Jan till 31st May will be called as a registered person. If answer is yes, can he collect the tax from the customer? If your answer is no, if the answer is no, then can Mr. A, who is not a registered person, can not issue a tax invoice? Can the department collect this tax? This is my questions to you. So before I answer, let me see your views. What will be your understanding on this particular non-compliance? There's a slight time gap between your answers posted and my window updated. I'll wait for a minute to have your views, collective views. Harish says, not a registered person, not possible to collect tax. Okay, I agree with your view, Harish. Venkat says, not possible to collect tax. Okay. Let me have other views also. Priya, Naveen, and Ramakrishna, Indrakshi. Let me have your views. Indrakshi says he's not a registered person. Absolutely correct. And what happens to the tax, ma'am? Harish and Venkat says not possible, not a registered person. Okay. I'll wait for one more view. Good. Sarvanan says, but department can collect the tax from A. Is he liable to get registered? Perfect. Now this is what we have to look at. Sarvanan has a point here. He says, though Mr. A is not a registered person, department has a right to collect the tax from A because he is liable to be registered on this date called 15 Jan 2021. So the answer would be, I draw your attention to section 25. In the last class, we have discussed with the provisions called registration. If the registration is not obtained, the department officer has a right to get me registered, right? So here they'll not get me registered. Rather, they will say, boss, you are supposed to register, you aren't registered. As per section 25, Mr. A is a taxable person for the period 15th Jan 2021 to 31st May 2021. Tax due but not paid shall be recovered by the proper officer. Tax due but not paid will be recovered by the proper officer as per GST provisions. Section 25, read with your registration provision, read with section 7, read with section 74, not yet discussed. Wait for that section 74, it to get started. And also section 122, which is connected with your penal provisions. Absolutely don't get boggled with this section numbers, man. Just understand the concept. So my registration concept says that I'm a taxable person. Look at the term I have used. I don't use the term registered person. I use a term called taxable person. So for that period, Mr. A happens to be a taxable person. That means he's supposed to get registered and pay the tax, but not paid. So accordingly, he cannot collect taxes from the customer. Now let's come back to our presentation. So my GST law says that only a registered person who supplies what taxable goods. Now, when I talk about tax invoice, only the goods which are taxable, I use a tax invoice. So what if it is not taxable goods? Wait for a couple of slides. We will see what needs to be done. So I have to raise an invoice. I have to raise an invoice where there is a movement of goods, where there is a movement of goods prior to removal or at the removal. So what if there is no removal? When you make a delivery of the goods or when you make available, bill to ship too, please understand bill to ship. You're making a delivery of the goods means you don't receive the goods. Before receiving, you make a availability of delivery of goods to the customer. Or when there is no movement, you're making the goods available. Then you have to issue a tax invoice. Now, with respect to goods, are we clear? Before I go to services, in goods, I have two kind of transactions: movement of goods, where delivery or making available. Movement of goods, I move on my own credit. Delivery of goods, bill to ship to transaction, and connected with that, available. So in these two cases, only a registered person who is registered can issue a tax invoice in relation to taxable goods. This is the funda which my section 31 talks about. Now, services, intangible in nature. Services, intangible in nature. Unlike like when we discuss with accounting standard 9, there is a connection of your sale of goods where there is a risk and rewards transfer. But in case of services, provision of service, it is very, very important to understand what is the contract. As per the contract, when I can recognize a revenue. If there is a money which has to be paid, which is refundable, non-refundable, there are multiple clauses in my contract which are connected for me to understand with this concept called services. I'll come back to my Excel file. I'll give you a couple of examples. Then we'll come back to this particular slide called services. So whenever we talk about services, I'll give you a couple of examples. Based on the examples, let us go back to the concepts. First example. Contract for software development. Contract for works contract. Manpower deployment. These examples, you can make a note in your running work note so that you can connect these examples when you prepare for your examination. Students, please keep in mind, always make a note of examples. You have your institute material with you. I would recommend in the institute material, if you can make the example using your pencil, examination time, you need not study. You just need to, the moment you glance through the example, you can recollect the concepts for your examination. So use your pencil, make a note of examples in your working institute material to the extent possible. I recommend, please have your institute material in hand when you are listening these online coaching classes. Reason, a lot of work has been done by Board of Studies to put the institute material in one place to make you understand. So it's a best compilation you can have for your examination. Coming back, point number 1, contract for service deployment. Say software development. I get into a contract for developing a software. For a moment, let us take example of a chartered accountant. I am a chartered accountant. One of my client needs a program, needs a software designed for issuing a tax invoice, e-way bill preparation, cancellation of e-way bill, delivery challan, preparation of your returns, preparation of your outward tax liability, input tax liability. I, being a chartered accountant, entire package was given to me for developing a particular software. Now, always there is a question of element where what if the contract doesn't go forward? What if I do a lot of discussion, client doesn't come forward? What if the end result doesn't happen? So I, as a service provider, demand 20% non-refundable payment. I, as a service provider, I would say, assuming the contract of the software development is 5 lakh. For 5 lakh, I would say, I'll ask the company, look, I'm serious to help on this software. What if your team is not prepared? What if something goes wrong? So let me have a commitment from you, 20% of the contract value, non-refundable. Why do I say non-refundable? Reason, like whatever initial discussion, the brainstorming, a lot of things happen. I don't want anything to go for toss. Out of my experience, this is my demand. This is my example number one. Example number two, contract for works contract. Like I am a civil engineer, I have to do some works contract where there is a 75% of material, 25% of labor. Though there is a concentration of material and labor, it will be called as a composite supply. Predominantly, the prima facie supply is labor, so I would call that as a service. Now, when I say 75% of material, for me to start with this project, like I'll be doing on a milestone basis. So I'll say, so please give me 10%, what I can say, EMD, not EMD, 10% deposit, which can be appropriated in a phased manner. I need a 10% deposit. Whatever money you give, please adjust in your running bill. This is my second contract. Third contract, manpower deployment. I am a manpower, say like security or housekeeping service. Every month, I need 5 people to come to work in my place. So there is a contract. People will come, people will go. So there is no advance nor deposit. Now, why I give these three examples? For you to understand that, money which has been paid in advance. Now, in example number one, advance. Example number two, advance. Example number three, no advance. Look at your accounting standard 9, revenue recognition. The money which has been received in example number one, by chance, if the contract gets cancelled, what will happen? And the day I receive that money, how do you apply your provisions? Say a contract value is 5 lakh. Contract value is 5 lakh. Sign off happened on, say 20th March 2021, where rupees 1 lakh received. Question to you. When I receive that money of 1 lakh, can I call that as a current liability, money received in advance, park in your balance sheet, or can I book that as an income in my revenue? What do you say as per UIS 9? The question continuation to GST law. When I receive that money of 1 lakh, can I call it a service rendered or is it an advance received? How does it matter? I'll wait for your views and then I'll give a clarity on this concept. Please connect with your other topics. That is the only way you read the subject in a better fashion. I'm taking little time to give you practical examples. Don't worry, I'll cover entire syllabus in today's session. There is a time gap. I'll wait for a couple of seconds. Naveen says it is advanced. Think through, Naveen. Apply your provisions of accounting standard and also see whether it's money to be recognized as revenue. Yes or no. Durga Rao, rent a cab unless it is used for the same line of activity. Section 17 does not permit you to take a ITC. Durga Rao, you have to read section 17, subsection 5, where you get a clarity. Unless you are in the same line of function, you cannot take. Sarana has an answer. Advance received as no work has been started. Now, let me come back and explain this way. The right on the money has been crystallized. Now, when I have signed a contract and the contract says that this is non-refundable, my contract says that this money, 1 lakh, what was paid, is a non-refundable deposit. That means it is a money confirmed, committed. Whatever may come on 20th March, the moment I receive 1 lakh, I treat that as a revenue. Reason, it is a committed money. I can treat that as a revenue in my books of accounts. Same way, completion of service, I would call as a rendition of service. I would call that as a provision of service. Why? Why? This is non-refundable. When you read the definition called consideration, in definition consideration, it says money which is refundable is not forming part of consideration. Now, in example number 2, there is a deposit which is being appropriated. It is not a non-refundable deposit. Since example number 1, it is not a non-refundable deposit. It doesn't get away from my definition called consideration. So, as per definition, consideration, not a deposit, a provision of service. Example 2, it's an advance, not a provision of service. Example 3, as and when I receive money, I'll pay. Now, these are a couple of examples connected with your service. So let us come back to time of invoice to be issued in case of a service. Similar provision copied from my goods, a registered person who supplies taxable services before or at the time or after the provision of service. Now here, removal before or at the time of removal in case of goods, but in case of services, before provision of service or after the provision of service within a prescribed period. There is a tax invoice which needs to be issued. Please make a note. Please make a note in your institute material, page number 10.5, under subsection 2, where you have mentioned about services, where this term prescribed period is there. There you can make a note, reference to rule 37, reference to rule 37, 30 days. Please make a note. This is in relation to your services. Now, services again, you have multiple category: bank, insurance, NBFC. For these 3 organizations, 45 days. 45 days. For what? Bank, insurance company, non-banking financial corporation. Please make a note in your institute material. Now, this is what my section 31 talks about your services. Now, government may, on the recommendations of the council, specify a category of services or supplies for which, when a tax invoice can be issued, what is the time, what is the manner in which a tax invoice can be issued. I'll give an example. There could be an industry, there could be a business where there is no standard working function. Take example of oil exploration. When I have an oil exploration, when I have a contract, like I have to bill on private party, I also need to get some revenue from government on the basis of oil which is explored. When the business model itself is dynamic, when it has no standard equation, government on the recommendations of the council identify the nature of business and give a recommendation. For what? For that nature of business, when a tax invoice can be issued, what is the time and how a tax invoice can be issued. All these aspects can be defined as per the recommendations of the council. Now, internal audit, majority of you would have done your internal audit where you would have verified physical. Now, these days, since 2020, most of you would have been restricted yourselves to electronic audit, where you don't visit the premises of the client, rather the documents do come as a sample. On the basis of your best judgment sampling, you will pick few purchase documents and you verify the documents and say, yes, ITC can be availed as per the provisions of section 16, read with section 17. Just a while ago, Durgara was asking a question, so can I take an input tax credit on rent-a-cab service? Now here, when we read about tax invoice, please understand, a simple question comes to a layman. Now, why do the businessmen depend on a professional? For the simple reason, we have a patience to read the tax law, make a simplified filter and say, this is relevant for your development when it comes to your ERP, when it comes to your contractual documentation. Similarly, when someone is issuing a tax invoice, there is a reference to Rule 46. Make a note, Rule 46. A tax invoice should have details. There are around 13 line items to be mentioned in a tax invoice. invoice date, invoice number, consecutive number for 16 digits, then your HSN code, description, your tax breakup, tax rate, signature, your address, no place of dispatch. Likewise, there are certain items which needs to be mentioned on a tax invoice. But Rule 36 comes and says, look, whenever someone is verifying a tax invoice, there are five elements. There are five elements. If these five elements are there, it is a valid document for input tax availment. I repeat, as per Rule 36, make a note, as per Rule 36, if all the details as per Rule 46 not available, but still, the five elements as per Rule 36, the five elements as per Rule 36, if available, it is a eligible document for input tax availment. So what is that? Those five elements. First element is your GST number. First element is GST number of supplier and recipient. On the tax invoice, in case of a B2B transaction, who is the supplier, who is the buyer, who is the recipient? GST number of supplier, GST number of recipient, mandatory. So what if a tax invoice is there, name is there, GST number is missing? Authority say, sir, Rule 36 says a GST number is compulsory. Argument comes further. Sir, everything is electronic. If you look into my GSTR 2A or GSTR 2B, my vendor has filed written properly. It is coming and appearing in my GSTR 2B. Why don't you give a credit? Documentation is a documentation. When we go to the court of law, procedural aspects will be given priority. So first and foremost, GST number is required. This is my first complaint. Second, amount of, taxable total value. Second element is, what is the total value? On a tax invoice, what is the total value of supply? What is the total taxable value of supply? On that, what is the tax involved? This continuation to this is my third element. So on the total value, what is the taxable value and tax? IGST, CGST, SGST. What is the amount of tax? If it is SGST, CGST, bifurcate. Most of the cases you will see 18% GST. So what is it 18% GST? Is it IGST? Is it C and S? There is a breakup of that GST to be mentioned on invoice. Third requirement. Fourth requirement, very important. In case of a interstate supply, reference to place of supply is compulsory. Most of you would have not noticed that when there is a bill which is given, whenever there is a purchase document, in case of an interstate supply, reference to place of supply is required. Now, I'll give you the backdrop of this provision. All of you have known that GST is a consumption-based taxation. Many of you would have come across this tax planning. I wouldn't say tax evasion, tax planning. What you would say when you have done an audit, internal audit for a company, say a company has got branches in 4 or 5 locations. When an employee travels to another branch, there is a hotel accommodation. When an employee does a travel, there is a 8 ticket booking. Now, it is important in case of a hotel accommodation, the place of supply, reference to section 12 services, it says the location where immovable property is located, that shall be your place of supply. Service provider is in a state, place of supply is in the state. Now, you cannot travel back, you cannot forcibly bring back that credit to the residing state. So for that reason, my Rule 36 says, if at all it is an interstate supply, reference to this term place of supply is very, very important. Question comes here. Again, a chartered accountant mind, I would say tax planning. Sir, bill doesn't have place of supply. When I look into my GSTR 2B, there is a place of supply given. Is that okay? This is a thin line of argument where the department officers say a rule is a rule, though it is available on electronic form. I would say unless it is printed on a tax invoice, I'll not give you a benefit of input tax credit. Last and final, description of goods or services. So on a tax invoice, we should know what is the goods, what is the services we have purchased. Now, these are the basic elements which are required on my tax invoice for me to claim a input tax credit. So Hope this is clear. Let me just see quickly if there are any questions so far. Okay. Saravanan, I think you have given answer to the previous question. Even if the work is not started, since the money was received and it is non-refundable deposit, it fits into the definition of a consideration law. That is the reason we need to study the GST law in consultation, continuation with my GST. Now, so far so good, no doubts. Now, important aspect: zero rated supply. What is a zero rated supply? Supply of goods and services to SEZ unit, to SEZ developer, or actual export out of India. You all know that special economic zone has got a specific authority, specific provisions. Untouchable area, or an area which is having a tax haven for the businessman. That is the importance with respect to SEZ. Now, when I raise an invoice to SEZ, you have already studied your Section 8 and IGST Act, where supplies to SEZ unit, supplies to SEZ developer, exports out of India shall be considered as an interstate supply. So I have a choice to raise a tax invoice. When I raise a tax invoice, I can raise a tax invoice with payment of tax, without payment of tax. Now, there's a question called payment of tax. Why do I pay tax? Now, under GST law, we have a separate topic called refund under GST law. To get a refund for me on all my purchases. Why? I'll explain the concept and I'll come to this slide. I purchase goods or services and I supply the goods or services to SEZ. All of us know that exports and SEZ are tax-free zone. When there is a tax-free zone, my purchases on which I have taken ITC gets accumulated in my balance sheet. In balance sheet, current assets, duties and taxes. This balance sheet gets heavier every month. Why? I have been accumulating my input tax credit. Unfortunately, my output tax is zero when I supply to SEZ. Now, there, your advice, your expertise comes and says, sir, when you supply to SEZ, there is a provision in the GST law, go and file a refund application. What happens? The money which is sitting in my loans and advances gets converted as a cash and gets credited to bank account. I repeat, the money which is sitting in your balance sheet, current asset under loans and advances, by applying the provisions of GST law, gets converted as a cash, means not liquid cash, gets into the bank account. Now, having a current asset as a bank account is much, much healthier than having as a duties and taxes receivable from government authorities. Now, that is a mechanism where I have a provision to export, I have a provision to supply with payment, without payment. Now, I'll deal separately when I come to the different provisions. Time being, please understand, when a tax invoice was issued, I as a supplier can make the payment of tax. So when I make a payment of tax, I have to clearly indicate this language on my tax invoice. Look at this language. This supply is meant for export, or this supply is meant for SEZ unit or SEZ developer. For what? For authorized operations. I'll give an example for you to understand why is this so important, called this authorized operations. Let us take example of Wipro. Wipro has got its presence in India across 18 states. Let's take example of Tamil Nadu. In Tamil Nadu, Wipro has got SEZ unit, Wipro has got non-SEZ unit. Now, for a moment, XYZ and Co, a partnership firm, has been appointed as an auditor for Tamil Nadu operations. Now, when I say Tamil Nadu operations, it includes non-SEZ, it includes SEZ. Now, when audit is done, could be your internal audit, could be your tax audit, could be your interim review, whatever be the thing, only restricted to Tamil Nadu. Now, there could be a possibility that this being a service, I cannot say this was consumed in SEZ. I cannot say it was completely consumed outside domestic tariff area, means not a SEZ unit. Now, there comes the matter called only the goods, only the services which are meant for authorized operations are relevant. As of today, my GSTLR does not define this term called authorized operations. If any of you have experience under service tax law, if you have experience under service tax law, there is a procedure called Form A1, A2. That means I, as a SEZ unit, I go to the SEZ officer and say, sir, I do this particular activity. I'm an entity called Wipro. I do this software services. I need to have infrastructure. I need to have machines repair. I need to have AC for me to work. I need to have housekeeping service. I need to have employee pickup and drop. So I list down my requirements and I go to the officer, SEZ Development Commissioner. That development commissioner says Wipro is entitled to buy, procure these goods or these services. Also, they'll say these goods, this is a vendor. For these services, this is a vendor. So they give a list of operations which is called authorized operations. This was a prerequisite under service tax. Under GST, as of today, there is no prerequisite. Just I need to sign copy this language on my document called tax invoice. So when I pay, I have to mention this language. So what if I export without payment? So when I export or when I supply without payment of IGST, then the law says that you have a choice to execute a bond or you have a choice to execute a LUT. Now, payment of tax, government has received the money. If something goes wrong, government is not going to give a refund. Clear with that? So what if I supply without payment of tax? Now, this comes where a lot of tax evasion happens. Government wants to protect its interest where they say, you either execute a bond or give me a letter of undertaking. Bond, letter of undertaking, not much difference. Bond, I give a authorization, give a declaration. I sign to the President of India. Any declaration, any bond, any bank guarantee generally we give, this is directly addressed to the President. Reason he is a first citizen and he is the custodian of the rights of revenue. So this bond will be addressed to so-and-so person or alternatively a letter of undertaking. Please keep in mind, on the invoice, I have to mention that this is a supply which is meant for export, supplies to SEZ unit or this authorized operations without payment of tax. When I say without payment of tax, I have to mention either bond is executed or LUT is executed. This is my requirement under GST law when I issue a tax invoice. This is what we need to understand. Now, when I issue a tax invoice, most of you would have seen these companies, they print an invoice. I don't know how many of you have done audit for government undertakings. I'll not name, but there are non-government undertakings which are akin, which are similar to government organizations. There will be a what you call dot matrix printer. The line goes on this to that and that to this end, and now you have the invoices printed. 4 to 5 sets are printed when an invoice is issued. You would have seen all these big organizations. They print 5 sets, at least 3 sets. The law says in case of goods, you should print 3 sets. Original, duplicate, triplicate. Original is meant for recipient, duplicate is for transporter, triplicate is for supplier. If it is a service, 2 sets. Original is to the customer, recipient, duplicate, I can retain. There is a printing mistake, spelling mistake, duplicate as written erroneously. Pardon for that. So in case of a service, only 2 sets are required. Now, this is prior to introduction of E-invoice. After E-invoice has come into picture, this rule has been set aside. What they say, any invoice which is issued as per E-invoice compliance, no need to print 3 sets, no need to print 2 sets. You just print 1 document electronically, that is good enough. I'll come to E-invoice slide in a while, maybe 10 to 15 minutes from now. I'll explain in detail what is my E-invoice provision. So examination, please expect one question. Please expect one question for 2 marks. You have a lengthy question for 8 marks or 4 marks. Out of that, one sub question will be there. XYZ Limited is having a complaints to issue E-invoice under GST law. Their accountant has printed an invoice in one set for removal of goods. There was a departmental officer who has intercepted the vehicle and say there was no complaints as per section 31. Instead of giving 3 invoices, only one document was given. Examine the provisions. You can very well mention that as per Rule 48 of E-invoice provisions, any invoice which is issued electronically called E-invoice, no need to have this 3 documents. No need to have these 2 documents. Only E-invoice 1 document is good for goods, for services. This is one question which you can expect for 2 marks from this topic called E-invoice. Let's move further. Now, this is again a complaints thing. HSN, reference to Harmonized System of Nomenclature or a Service Accounting Code. Whenever an invoice is printed, assessee having a turnover up to aggregate turnover up to 5 crore, 4 digits is compulsory. Exceeding 5 crore, 6 digits is mandatory. As per your classification, there is one session I think Vignesh sir would have touched on classification. 8 digit is a regular HSN code. But as on today, under GST law, maximum 6 digits is sufficient. Assessee having an aggregate turnover up to 5 crore, 4, above 5 crore, 6 digits. Now, this concept of revised tax invoice, I've given an example with Mr. EA. So I'll skip this. Now, please keep in mind, one point I would mention here, examination, I'll explain this example this way, coming back to my Excel file. Application for registration. Application for registration. I can apply within the due date for applying or after the due date. As per section 25, within 30 days of applicability. After 30 days of applicability. Now, last session also we have discussed this particular example. Please keep in mind, whenever we talk about this revised invoice, first and foremost, examination they'll ask, have you applied for registration within 30 days? Example, I was talking about Mr. A. 15 Jan 2021 is the date of occurrence for section 24. Section 24 deals with your compulsory registration. Now, as per my section 24, read with section 25, 30 days is the time limit they have given. Right? On or before 14 Feb 21, application has to be filed. Now, if this is the case, so generally what happens, 15 Jan, I am supposed to register. I applied for my registration. This 14 Feb is my time limit to apply for registration. Feb is my time limit for application. Say my date of application is 10th Feb 2021. I applied on 10th Feb 2021. My officer took 10 days to process. On 20th Feb 2021, RC approved effective from 15th Jan 2021. Now, please understand. Officer who processes your application, first and foremost, he'll check one thing. Look, you are come for registration. Please explain from when you are supposed to register and when you have applied. So the basic duty of his officer will be, he'll be he has to comply with the law. So he says, okay, you as an applicant, now in this case, we were talking about Mr. A. 15th Jan 2021, he is supposed to apply for registration. As per the law, I have given 30 days time limit. So till 14th Feb, I can apply. So as an applicant, what I have done, I applied on 10th Feb. So condition will be, since the applicant has applied on the date of, prior to the due date, the officer who is processing the application on 20th Feb, he'll issue a registration certificate valid from 15 Jan 2021. Now, the beauty of this transaction is, the period from 15th Jan 2021 to 20th Feb 2021, revised tax invoice can be issued for collection of tax. Now, examination, expect 2 marks question again from this applicability, testing of whether the application is filed. If it is filed, how can I issue a revised tax invoice? Examination, wait and watch for again 2 marks adjustment question on this particular model. Hope this particular example is clear. Any doubts so far? Please put into the question window. I'll clarify your doubts. Durga Rao has a question. In case of a zero rated supply, tax is zero. Then what is a means of payment of integrated tax? Durga Rao, I was explaining this concept called refund. So you remember this loans and advances to be converted into my bank balance as a current asset. So I have a mechanism. One, go for refund application without payment of tax. Second, you pay the tax and get that amount refunded back into your bank account. So this is a mechanism allowed under Rule 96. When we come to the refund provisions, Durga Rao, I'll explain in detail. Time being, you can make a note, Rule 96. Further, there was one more question. While preparing HSN, why is sales under GSTR 1, HSN is auto-populated, then what is the importance of 6? HSN is not auto-populated, ma. Durga Rao, please understand. HSN is not auto-populated. HSN is what we need to quote on a tax invoice, right? Now, coming back, this examination, issuance of a tax invoice, that is your revised tax invoice, expected 2 marks question. The law says within 30 days from the date of registration, I can issue a revised invoice. So if in this case, 20th Feb is my registration issued. So from 20th Feb till within 30 days, I have a right to raise a document called revised tax invoice to collect the tax for that particular intervening period. This is possible only if I have filed my application within 30 days of liability to register. This is what we need to understand. Now, I'll give an example where again, see, when we talk about these tax invoices and all, practically you will come across with a lot of operational issues. I don't know how many of you have noticed this. There is battery. Now, after COVID has come, this power backup, UPS along with the battery. Exide and Amaron. Now, these are the two leading companies in India who are into manufacturing of power backup UPS and battery. After COVID has come, their sales have been jumped like anything. Thanks to COVID, these two companies have been doing fantastically well under COVID. Now, these two companies, what they say, look, I'll sell you UPS power backup along with that battery. I'll give you 3 years warranty. And the 3 years warranty is subjected to every month a physical visit where 50 rupees nominal fee will be collected. Now, please imagine, I have purchased a UPS. Normally 1 year is a warranty, but they gave 3 years, that is 2 years extended warranty with the condition that, their technician comes to my home for a inspection. So when the engineer comes, he'll check the distilled water, he will check the condition of the battery, applying some grease here and there, nuts and bolts, lot of things he'll check, and then he'll go back. Why? Amaron or Exide wants to protect their warranty clause. For that, they insist that engineer or a visit is must. Now, on an average, every engineer visits not less than 60 to 75 houses in a day. 60 to 75 houses in a day. Now, this is a volume of business which has come after COVID. Now, practically put yourself into the shoes of this particular entity. So, except for a moment, take Tamil Nadu alone. If you see on an average in a day, close to close, there will be 10,000. I'm just giving a rough estimate. 10,000 invoices to be raised for each visit of 50 rupees door delivery. Now, sir, is it practically possible to print 10,000 invoices? Sir, is it practically possible to write 10,000 invoices? If I start issuing accountant, like I need to hire the 15 to 20 accountants, or I need to have automated billing, very, very costly exercise. The law has simplified, saying that if the value of supply is less than 200, don't worry. You can consolidate all those supplies in a day and issue one tax invoice. So all the 10,000, assuming 10,000 into 50, I get, say, 5 lakh. I receive 5 lakhs every day, raise one invoice. That is good enough. This is what my section 31 says. Further moving on. So what if all along you have been talking about tax invoice? What if I have supplied exempted goods? Don't issue a tax invoice, issue a bill of supply. So if I am a composition dealer, if I'm supplying the services which are exempted, if I'm into composition, don't issue a tax invoice, issue a bill of supply. Not much to worry on that. Bill of supply, like tax invoice, who is the supplier, who is the recipient, what is the description, the invoice number, HSN, issue, date of issue, and the value of supply. These are the basic elements which are required on a tax invoice. Now, next aspect is your receipt voucher. I'll take your little time over here for you to understand the importance of this document called receipt voucher. Now, see, when you read theory as a theory, you'll not understand anything. When you try to understand why is that this concept is there, what if this concept is not there, what is going to happen, all your answers get addressed when you have this approach. This document called receipt voucher says, whenever you receive money in advance, please issue a voucher called receipt voucher. When you read, you remember section 13. Please make a note in your working note. After this class, I would recommend just go back and read your section 13. Section 13(1)(3) deals with your time of supply for services. They say, I need to pay tax to government on issuing a tax invoice or on receipt of an advance. Now, what if I have received money, but I haven't paid the tax? How does the department get to know? When I find my GSTR1, there is one document, there is a table called document history. In that document history, all the details of documents, tax invoice, debit note, credit note, receipt voucher, payment voucher, delivery challan, job work voucher. Now, all these documents I need to give from what number to what number I have issued in that particular month. This particular section says, look, as a registered person, whenever you receive money in advance, you issue a voucher called receipt voucher. Sir, I received that money, I don't know what is the nature. When the nature is not defined, when the rate of tax is not identified, then they say, don't worry. You presume that this is a rate of tax 18%. So I don't know whether it's intrastate or interstate. Please consider as an interstate supply. I'll give a classic example. If you would have seen this entity called Infosys or Wipro or any of these big software companies or any other manufacturing industry per se, you have a bank account, not branch level. You have a bank account centralized at one location. So when you receive money, money has been received in advance. So how do I know? Is this money for goods or services? So assuming that I know that this is for services, how do I know what is the rate of tax? I don't even know from where this money has come. For that, my Rule 50 has given an answer saying that Whenever money has come, you don't know what is the nature of that money. Is it for goods or is it for services? They say, consider that it is for services, and you consider that rate of tax is 18%. You consider that it is interstate supply and pay IGST on that particular receipt voucher. Now, you remember, for a moment, you happen to be a economic advisor to the finance ministry. Finance ministry asks you a question. Look, the tax collections are 1 lakh crore. Our month-on-month commitment for distribution to states is 1,20,000 crore. There is a deficit of 20,000. Tell me how we can make good of 20,000. Then naturally, people like you and me will come with this concepts called TDS, TCS, no advances. All these are the concepts which have taken birth considering these provisions. So that is how this receipt voucher has taken its origination, where when a money was received, I have to consider and offer it for payment of tax. Now, continuation to that receipt. So money received, I got to know that this money was not my money, it was someone else's money. I have refunded back. I haven't done any service, I haven't issued any tax invoice. What I have to do? You asked me to pay tax, I have paid tax. Then this rule 51 comes and says, don't worry. You have received money? Yes. You have issued a receipt voucher? Yes. And have you issued an invoice? No. Have you done any service? No. In case if no service is done, no tax invoice is issued, then issue a voucher called refund voucher. Using a refund voucher, I claim back whatever money I have collected from my customer, whatever tax I have paid to the government, I collect back and I give it back to my customer. So where do we come across these provisions? Where is important for us to understand? I hold your attention at this moment to connect with real estate. See, you have to grow your thought process to understand and appreciate these provisions. Imagine a real estate business. Now, in case of real estate, now these days, for your kind information, many of the people are willing to buy a small home, and also they are willing to buy a small vehicle. Why? To avoid public transportation, and also to have their individuality protected. They are moving to their own home. There is a dip in prices of real estate. When money is paid by the customer, I offer it for tax because it is considered as advance. What if the customer has cancelled that booking? I come and apply this voucher called refund voucher. In case of advance, I receive money. Again, customer wanted to cancel, I refund back. Was there any service? Sir, there is no service. Was there a supply? Sir, there is no supply. Customer paid on 15th Jan, 18th Jan, he decided to take back. So I give back that money by using a refund voucher. Next topic called self-tax invoice. Just give me a minute. Next concept in discussion is self-tax invoice. Most of you wouldn't have heard this term, but this was coined under GST law as a mandatory aspect. What is a self-tax invoice? When a supplier who supplies goods or services is not registered on the date of supply, and the person who is receiving that service and the person who is receiving the service who happen to be a recipient, that recipient has to pay tax on that particular supply, either under 9.3 or 9.4. In your working note, make a reference 9.3, 9 within brackets 3 hyphen notified list of goods, notified list of services. 9.4, procurement from a unregistered supplier. Procurement from a unregistered supplier. Within brackets, predominantly real estate sector. Predominantly real estate sector. Now, this 9.3 talks about your notified goods, notified services. 9.4 talks about supplies from an unregistered person in connection with my construction business. So here, this section 31 read with rule 46 says, a supplier who is not registered or a person who supplied the goods which have been notified under 9.3 or 9.4, in that case, a recipient shall issue an invoice called self-tax invoice. I'll come to this Excel file to make you understand once again. Rule 36, little important. Self-tax invoice. Why do I have a self-tax invoice? It's a regulation, self-regulation. But a lot of work burden increases in the name of tax complaints. We don't have a choice. We have to comply with the law. So self-tax invoice says that supplier registered, supplier unregistered. Now, supplier could be registered, supplier could not be registered. So in both the cases, when supplier is registered and the nature of supplies is covered under section 9.3 or 9.4, we need to issue something called self-tax invoice. So if it is an unregistered case, 9.4 comes straight away into application. So simple concept. For payment of tax, I need to raise a self-tax invoice. So what happens? I have 30 transactions which are covered under 9.3. I have to raise 30 different invoices. So what if it is an unregistered dealer purchase? Only exception for unregistered purchase. If all the purchases in a day exceeds 5,000 from an unregistered supplier, for those transactions, consolidated one invoice in a month you can issue. I repeat. In case of your 9.4, that is your unregistered supplier, in a day, the aggregate value of those unregistered purchases exceeds 5,000. I need not issue every transaction separate invoice. I club all the transactions and issue one self-tax invoice. Sufficient. This is the expectation under section 31. Now, with respect to continuous supply of goods, we have discussed on this continuous supply of goods for your hospital, supply of oxygen. We have discussed on this supply of gas in case of a high-end apartments. So in case of supply of goods, when the accounts are issued, the day you have to raise a tax invoice, or when the payment is due, on that day you have to raise an invoice. So what in case of a services? In case of a services, the payment, if it is ascertainable from the contract, raise the invoice. So no payment is not ascertainable. The day you receive the payment, raise the invoice. Simple funda. In case of service, look at the contract. Contract says that this is a milestone, raise an invoice. No, sir, I received money, raise an invoice. That's all. In case of a continuous supply of services. If the service is connected with completion of an event, whenever the event is completed, raise the invoice. Not much to worry on these concepts. And when a service is terminated under contract, to the extent you have rendered the service, raise invoice. I'll explain a minute over here. This provision says, look, when you are into a service industry, it is not guaranteed that all the services you raise a bill. What if there is a partial performance and in between the contract has been terminated? There is a partial performance, contract has been terminated. Till the date of your termination, whatever work you have done, please raise a bill. Now, this is $1 million complaints issue for a service industry. Why? Documentation. The more documentation you have, the more complaints issues comes into picture. Sir, what if I raise the invoice? Customer is not willing to pay. It has become a bad debt. Simple answer. My GST law has no connection with your bad debt. The moment you have said you have rendered a service, the law says bill for it. Sir, customer is not willing to pay. Nothing doing. Till the extent of work you have done, raise an invoice. Now, this is a little harsh provision which was there under section 31. Now, this is one fantastic provision. I'll come to this sale on approval. Many of the young, brilliant chartered accountants have this example. They love to apply this concept. I'll come to this concept where I wouldn't say tax planning, tax evasion. Tax planning is possible. Under GST law, when you remember, when we started with our discussion, I was giving example of OEM supply called Tata Motors. In the case of Tata Motors, I was forced to pay 4.5 lakh if the goods are not accepted by the customer. So my professional mind comes and says, do one thing. Accounting standard 9 says transfer of risk and rewards. My revenue recognition is intact. What if I adopt the same funda called goods sent on approval basis? My section 31 says, don't issue tax invoice if goods are meant for sale on approval basis. Now, goods meant for sale on approval basis. If this is the case, no need to raise a tax invoice the moment you remove. I'll give you time limit of 6 months. I'll give you time limit of 6 months. If the supply got converted, if supply confirmed before 6 months, raise a tax invoice. If not, bring back the goods within 6 months. Very simple. I understand. Back of your mind, no, the monkey mind will start thinking, sir, you said if not, you bring back. I will say that it was confirmed. I'll raise a invoice again. I'll raise a credit note again. I'll extend for 6 months. So this is all tax planning which comes to a professional mind. Let us understand the provision and do a tax advice on this concept. So here the concept says, don't issue an invoice if it is on sale and approval. Time limit 6 months. If sale is confirmed, raise invoice before 6 months. So what if the customer is not approved? Get back those goods. Means within 6 months, get back the goods. So what if not brought back? Deem that removal happened on the day of its taking out. Tax not paid to be paid with interest and penalty. In simple terms, you have to get back. You have not got back. Pay the tax with interest and penalty. This is what my provision says. Next, delivery challan. Now, this is another tool. This is another tool where most of you can rely upon for your advisory purpose. A couple of questions are there. Let me just take through the questions. There is a question from Namita. Sir, you have talked about consolidated invoice. In whose name I have to issue? Namita, these are all B2C transactions. You can say cash sales. No need to mention any specific customer name. You can mention cash sales and account for that. If it is a B2B transaction, you don't have a choice, Namita, because customer wants a credit. You raise a separate invoice for all the transactions. Next, there is a question from Durga Rao. Suppose 10 buyers made supply of goods individually, taxable value is less than 200. Then how do I need to present in GSTR1? If 10 buyers I made, okay. Durga Rao, we call that as a B2C sale. Under B2C, I just show as one transaction. I clump all those things. No need to have a separate bifurcation. If it is a B2B, separate line lines. I don't have a choice. Hope I've clarified your doubt, both Durga Rao and Namita. Further, there is one more question. If we deposit tax on advance, that is on receipt, then will the government give us interest? Namita asked this question. Sir, I have received money in advance. I paid tax. After some point in time, I didn't render the service. So I have to refund back that money to my client. So when I'm issuing a refund voucher, will the government give back that refund along with interest? Answer is no, no. Only you are entitled to get an interest when an assessment order is passed for entitlement to get a refund. When I come to refund provisions, Namita, I'll explain you. You are entitled for 6% interest only in few cases, not in this particular case. Where the default is paying GST, where defaults in paying GST. Okay. Coming back. Rule 55. Now, Rule 55 is a delivery challan. Delivery challan. This is a document where there is no supply. means I have to move the goods. I'll give a couple of examples for you to understand this provision. Visualize. There's a company, take example Apollo Hospitals or Apollo Pharmacy. Apollo Hospitals, they have a head office in Chennai. They have their operations in South India, Kerala, Tamil Nadu, Karnataka, Andhra Pradesh, Telangana. So all the 5 states, they need to purchase something called New Year calendars. Now, this calendar, or I could say diary, they have purchased 1,000 diaries for each branch. From head office, they are sending the diary. Tell me, is that diary sent from head office to the respective branch? Is it a supply? Answer is no. It is given as a gift, not a supply. Second point, I have purchased something as a gift to be given to employee as an incentive. There was a very good performing employee. I have to recognize the performance. So as a corporate policy, I have to give some gift. So what I have done, I have purchased some item worth 10,000, some electronic handset or some gadget. There are 5 employees in a branch, 5 into 10, 50,000. I need to send this 50,000 to my employees, not a supply. Another example, you would have seen this paint shop. Paint, the building, we apply color, right? Any paint shop you go, you have a pamphlet they have given. They'll give you different colors with a code. If you say, I need this particular code, they'll see it is having INV 3876 as a code. What they will do in the machine, they just type INV 3876. They'll put 2-3 bottles together. Automatically the mixing happens and you will get the desired color. So that mixing machine, what you see, mixing machine is worth 1 lakh. Who is giving that mixing machine? For a moment, assuming Asian Paints. Asian Paints purchases the mixing machine. Each machine is worth 1 lakh. On that 28,000 GST paid. This machine is given as a free of supply to the dealer. Why? Dealer says, sir, if you don't give the machine, how will I sell the paint? And a condition that the dealer cannot sell other than Asian Paints. That's a condition. Now, the movement of machine from Asian Paints factory to the customer, is that a supply? No, it is not a supply. So these are a couple of examples where when there is no supply, I use this delivery challan. Also, the law says that, look, when you supply a liquid gas, when you don't know the exact quantum, then you can use a delivery challan. When you're sending the goods for job work, use a delivery challan. You're sending the goods other than supply, again, use a delivery challan. Other than supply, I've given examples of gift and this paint shop. So these are the documents where I use under Rule 55. Now, there could be a case of this semi-knock condition or completely knocked down. You would have seen windmill. Windmill has got 3 fans. That windmill cannot be assembled and sent as it is. What happens here? The windmill, entire windmill, they will knock it down, semi-knocked down. One wing will be coming into one container, which is having a 50 feet trailer. 50 feet trailer is a big vehicle. No turning and all, it doesn't happen just like that. So this windmill, when I sell as a windmill, but I cannot give as it is. So what they say, when you're sending the windmill on a semi-knocked condition, then use a delivery challan. First, you prepare an invoice. For every vehicle, you prepare a separate delivery challan. On the delivery challan, you mention, against this invoice, this is first delivery challan, this is second delivery challan. So if a windmill has to be supplied in 10 50 feet trailers, I prepare 10 delivery challans. Every truck will have certified true copy of invoice and a delivery challan. In addition to that, the last trailer will have an original copy of invoice. This is my provision under Rule 55 for tax invoice. Next. Paucity of time, not important. I'll just skip now. I'll come to the important aspects where your attention is required. E-invoice. One of the fantastic provision, examination, wait and watch for a question under E-invoice. Not much complexity. They'll ask you simple basic questions, which we will understand how to answer those questions. Now, what you see on my screen is an E-invoice. Students, we will do one thing. We will just take a break of 6 minutes. We are at 7:54. Let us have a break now. We will resume back at 8 p.m. We'll have a break for 6 minutes. discussion on this topic called E-invoice under GST law. E-invoice under GST law is a concept which has evolved, which has been adopted from the developed nations. In print media, in social media, you would have been reading that there was a invoice racket. There was a fake invoices. There was a bill trading, 200 crores. There was a money which was escaped from GST payment. So all these are the nuances which we have seen under GST law. The question comes here, sir, we were paying taxes in India, central excise was there, service tax was there, VAT was there, sales tax was there. Do you say that the tax escaping, the tax leakage was not there earlier? Answer is, it was there earlier, it was there now. The only difference was earlier it was manual, now electronic. This concept of e-invoice is a fantastic concept which was adopted where they say a supplier who has been notified. I repeat, a supplier who has been notified. Make a note in your working note. A supplier who has been notified for specified transactions, to issue a e-invoice, under Rule 48. Under Rule 48, having a reference of IRN and a QR code. I can say barcode, not a barcode, it's a QR code. So there is a reference, something called IRN. This is the first requirement. Second, this is my QR code reference. They say invoice should be electronically generated. Sir, how does it happen? Does my SAP, does my ERP, does my Microsoft Navision, does my Tally, does my Oracle, does it have these features? They say you have get it done develop. You don't have get it done electronically on the government portal. In fact, this IRN and this code is generated when the invoice is registered. When invoice is registered on what? On a government portal called IRP, Invoice Registration Portal. So the government has come with a thought process. As I was telling you, you are the future of this nation. Post qualification, if you have this IRS, you may tend to join the department as the assistant commissioner or the joint commissioner or the commissioner. Over a period of time, once you get into the economic advisory, you come with the best practices which are there global wide. Now, this is a concept called e-invoice, where revenue leakage is controlled, automation of bookkeeping is enabled, capturing of information is automated for written filing. Now, this is one step which was thought for simplification under GST law. I repeat, everything is automated, invoice is validated using a government portal, automation of filing of returns. This is what the knowledge which is envisaged under e-invoice. Now, there is something called IRP. What is IRP? Invoice Registration Portal. That means whatever transaction I do, click of a button, this invoice electronically need to go to the IRP. From IRP, I just push some data. Whatever data is required, I just push the data. If the data is validated, the validation is done successful, then it throws out something called IRN and this particular, what you call, QR code. Now this and this is generated. Now you have something called acknowledgement number, you have something called acknowledgement date. The day when this transaction has taken place, everything is recorded electronically. And this data travels to your return, this data travels to your ITC of the buyer, this data travels for e-way bill generation. Now this is a multiple integration which is envisaged under GST law. So examination, basics of e-invoice, what are the benefits under e-invoice? Expect a question from this particular topic. So I'm just, I have brought into 3 slides just to show you how e-invoice, because of the size, I just truncated this e-invoice. Now, so this concept of e-invoice, they have brought in with this concept called ease of doing business, ease of generation of reports. Now, please keep in mind, if you're not tech savvy, your future is going to be a question mark. You should upgrade yourselves to having a flair for technology. Now, gone are those days where if you're just an accountant, you don't lead anywhere. You should be a smart accountant where you should impress yourself with the technology. Now, filing of returns is everything is automated. There's no manual system. And there is multiple data available through bank module, through e-way bill module, through e-invoice module, through your GST system. There are various windows. Data is electronically abundantly available. If you would have heard under income tax, there's something called annual information system, AIS. So all your kundali is there electronically. So that is a path-breaking thought process, which was also brought under GST to control your evasion of tax payment. So how did this evasion of tax payment control? The answer for that. Now, I'll take a minute for you to understand what is it you have to see how this technology is working. There's something called AI, artificial intelligence. In addition to this, there is something called DS, data science, data analytics or data science. Artificial intelligence combined with data science, data analytics. This is a future which you have to think of. Doing it along CA, I would recommend your generation to get more technology skills in addition, for the reason you are much more, you'll have a bigger scope when you have technology at your hand. Now here, you would have seen fast tag. All the vehicles which go on a national highway, there's no cash payment. Cash payment is there. If anyone has to pay cash, twice the toll charges. So they wanted to electronify, everything is electronic mode. So if a consignment is moving from one place to another place, there are checkposts, there are toll gates. They wanted to do a navigation of this material movement. Now, in case of goods, was it actual movement? Was it a fictitious movement? Now, data is there abundant electronically. Imagine a person with a good data analytical skills and the data which is available electronically. Wonders can be done for revenue augmentation. And you, as a professional chartered accountant, if you want to make some career on your data science or data analytics, artificial intelligence, I would recommend get into that. Blockchain technology is another area, wonders you can do along with your professional course called chartered accountancy. Coming back, so this e-invoice, it's a path-breaking way where my invoice trading, my bill trading was controlled by way of a standardization. There was an interoperability. It was a data which is auto-populated. Now, I was showing once something called QR code. Imagine the material come to the factory. When the material come to the factory, your invoice is there. Someone just scans the invoice. Based on invoice, my accounting entry is posted at the gate itself. Based on that, vendor name is known, material name is there, quantity is there, HSN classification is there, value is there. What else I need? At the time of PO creation, I would map this material. Is it raw material? Is it semi-finished goods? Is it consumable? Is it capital goods? When you have a mapping at your inventory level, automation of your bookkeeping happens because of this e-invoice. This was a backdrop where developed nations have adopted. So this provision was brought into GST law by insertion of this rule 48. What they say, any invoice which you have to comply, this invoice should have some information. That information should be in the format called INV01. This is an invoice form. Not very difficult to remember the form name because it's an e-invoice. You can say form INV01. This form is nothing but the data. It's a format. Like, you have to visualize what data I have to send. Name of the customer, that is your registered customer, GST number, goods description, HSN code, value, the taxable value, other charges, rate of tax. If this information is there, it is good enough for the system to calculate. So this is the data what captures for preparation of your e-invoice. Now, please keep in mind, any person who has to issue an e-invoice but not issue, then that is not a document for taking an input tax credit under GST law. Under GST law, if a supplier who is supplying the goods has to mandatorily issue e-invoice, sir, how do I know that my supplier has to issue e-invoice? The answer is here. Every supplier whose aggregate turnover is exceeding 500 crore, with effect from 1st October 2020, he has to issue e-invoice. The same was amended on Jan 21, saying that from 500 crores, they have brought it down to 100 crore. The same was further brought down to 50 crore with effect from 1st April. So what we have to do? Health checkup of the supplier. If a supplier is having a turnover of this specified quantum with so and so dates, he has to issue invoice mandatorily under e-invoice. Now, who are the what suppliers are excluded from e-invoice? Examination, 2 marks. You can expect one question. Explain the exclusions for issuance of e-invoice. So point number 1, if the suppliers are to SEZ unit, no need of e-invoice. Please remember, SEZ developer, e-invoice is compulsory. Means I am a chartered accountant, I am an auditor. When I raise an invoice, if my customer happens to be SEZ unit, no need to have an e-invoice. If my customer happens to be a SEZ developer, then mandatorily e-invoice is required. Example, when I render services to Wipro is a software company, SEZ unit. When I render services to, say, L&T is a SEZ developer. SEZ developer, there is a difference. SEZ unit, there is a difference. So as of today, the law says supplies to SEZ unit, no need to have e-invoice. Service provider, who is an insurance company, banking company, financial institution, NBFC, no need to have a e-invoice. I repeat, SEZ unit, no need to issue e-invoice. SEZ developer has to issue. Like in my example, Wipro need not issue e-invoice. L&T has to issue e-invoice. Similarly, insurance company, banking company, NBFC, not to issue invoice. GTA, not required. Passenger transport, you are applying of motor vehicle one state to another state, not required. Exhibition of cinemas and cinematography film in a multiplex, not required. And for purpose of this aggregate turnover from financial 17-18, I'll see this 500 crore, 100 crore, 50 crore, etc. So if the turnover is exceeding, then the supplier has to mandatorily issue e-invoice. So for what transactions I have to issue e-invoice? Now in a business, when you understand, when I make a supply, my supply could be exports. My supply could be to SEZ. My supply could be for B2B. My supply could be for B2C. My supply could be other than supply, where a delivery channel is required. So when I have all these permutations and combinations, the list they have given here is, if it is a B2B, SEZ, if it is exports or deemed exports, supply, then e-invoice is required. What is the information I have to give? Please understand. B2B, supplies to SEZ developer, supplies to SEZ transaction, export transaction, deemed exports. Now all these 4 transactions, e-invoice is compulsory. What is excluded? B2C is alone excluded. Delivery challan, again excluded. Only when there is a supply where there is a tax invoice other than B2C, e-invoice is required. So information, I'll just leave this information for want of time. This we have discussed. Section 32 says that, look, I was talking about your revised tax invoice. Unless you are registered under GST law, you cannot collect tax. So what if I am not registered? You cannot collect. So what if I am a taxable person? You have to pay on an inclusive basis, but not supposed to collect from your customer. And if you have issued a tax invoice, it is expected as per section 33, on the tax invoice, you quote your tax amount properly. This is a requirement under GST law. Next, credit note under GST. Important aspect under GST law. Let me come to this section 34. Credit note under GST law. Now, for ease of understanding, I'll make you the basic background, then I'll come back to the provision. Whenever we talk about a credit note, you have to have an understanding in this fashion. A credit note can be financial or accounting credit note. Or on the other hand, I could also call this credit note as this fashion. Credit note with GST. Or commercial credit note. Now, you can have a credit note which is one bucket called financial or accounting credit note. Or on the other hand, you can have something called credit note with GST or a commercial credit note. Now, so why is this bifurcation required? The concept of GST has bifurcated transactions this way. When you're issuing a credit note, you see whether this is just a book accounting credit note or a credit note under GST law. This is a basic understanding we need to have. Now, this I'll just come back to the provisions and then I'll explain again this concept in a proper manner. Now, under GST, section 34, 3 cases I can issue a credit note. What is that? First case, taxable value or tax charged. Taxable value or tax charged in that invoice is found to exceed the taxable value or tax payable. Now, here I have 2 components. One is value, another is tax. So, when I have issued a tax invoice, if I have issued an invoice where taxable value is higher or tax is higher, I can issue a credit note. Where goods supplied are returned by the recipient. Goods are returned by the recipient. Let me come to your section 34 in Institute material. Yes, page number 10.42. Page number 10.42. A registered person who issues a credit note in relation to supply of goods or services of both shall be declared. Subsection 1, page number 10.42, subsection 1. Where the goods supplied are retained by the recipient or where goods or services are found to be deficient. Third case, there is a deficiency. Institute material, page number 10.42. These are the 3 provisions they have explained. First provision, I have charged taxable value. So when I raised an invoice, my purchase order says per unit 10 rupees. Erroneously, I have billed 11 rupees. 1 rupees excess I have billed. To reduce that 1 rupee, I can issue a credit note. Alternatively, so the tax rate mapping, instead of 12%, I did a mapping of 18%. Again, tax was higher. So either value or tax, I can issue a credit note. Point number 2, where goods supplied are returned by the recipient. The goods have been returned and those goods have to be received. Point number 3, where goods are found to be deficient. What is deficiency? Sir, I have supplied 100 pieces to my customer. When the customer did a physical stock taking, he said that 5 units there was a deficiency, because of which I have to issue credit note. Now, deficiency, it could be even for service also. Now, let me come back to my Excel file to explain this particular provision. Now, all along, my GST law says that if you're issuing a credit note under GST, 1, taxable value or tax is higher. 2, goods are returned. 3, there is a deficiency. Only in these 3 scenarios, I can issue a credit note under GST. That means when I bill to the customer, I would have paid GST on my tax invoice. Since the value is higher, since the GST is higher, I can issue a credit note. Or the goods are returned back by customer. When I say goods are returned, I should have received back the goods. Just because I got intimation, I cannot call that as a goods return. Third is deficiency. I could use it for goods, I can use it for services. Physical shortage or damage in transit or services not up to the satisfaction. In these three cases, my GST law says that a credit note can be issued for reduction of tax paid, subject to not passing on burden of tax. Now, this term burden of tax is very important. I don't know how many of you have remembered that this term called unjust enrichment. I also link this term unjust enrichment with something called what is that? Anti-profiting. Now, GST law says that, look, you have supplied. At the time of supply, you have paid the taxes. Subsequently, any of these 3 conditions are met. Taxable value or tax charged higher. Goods are returned by the customer. There is a deficiency in the goods. In these 3 cases, you raise a credit note. So when I raise a credit note, my output tax comes to that extent, subject to the condition that you're not passed on the burden of tax to your customer. That means to say, proof of ITC reversal by customer and non-payment of non-receipt of such ITC by the supplier. I'll put it this way. I'll give an example. Say, 1st Jan 2021, goods are supplied. Taxable value is 1 lakh. Tax is 18%. I'll say assessable value and tax. Now, so 1 lakh, I have paid tax value of 18,000. On 15th Jan 2021, received payment. How much I have received? Say, entire 1 lakh plus 18,000 I have received. On 2nd Feb 2021, goods are returned by customer. Goods are returned by customer. I, as a supplier, I say to the customer, look, I'll give a refund of tax, and I'll not give you a refund of tax portion. So I'll give you a refund of only 1 lakh. This tax, what happened? I haven't paid to the customer, saying that, look, I have collected tax from you and I paid to government. I have not retained with me. So I cannot refund back that amount. Now, what if on 2nd Feb 2021, credit note raised for 1 lakh and also in GST reported for this amount. Now look from the government point of view. In Jan, there is a receipt of money. In Feb, there is a reduction. So government has got neutral transaction. Government has not received tax. But now looking this concept of unjust enrichment or anti-profiting. Now, isn't it the supplier received that 18,000 pocketed that 18,000, again he is reducing his output tax. Now this is a condition what was said in your section 34, saying that burden of tax. The burden of tax should not have been passed on to your customer. This term burden of tax was used as incidence of tax. Page number 10.43, first box, incidence of tax. Underline that, incidence of tax. Now, there's a time limit for issuing a credit note. What does it say? Subsection 2. Every registered person, any registered person who issues a credit note in relation to supply of goods or services shall declare the details of such credit note in a written for the month of September, during which such credit note has been issued, but not later than September following end of the financial year in which such supply was made. So what they say, for time limit, financial year, from there, 6 months is a time limit for disclosure. That means to adjust credit note, that is taxes paid, the registered person cannot go beyond 6 months from the end of the financial year. So if a transaction is pertaining to financial year 2021, a transaction is pertaining to financial year 2021. Now here we were talking about a credit note issued on Feb 21. In Feb 21, erroneously, accountant forgot. So time limit will be September 21, GSTR 3B and GSTR 1. I as a supplier, I have to issue a tax credit note on or before September from the end of the financial year. This is what discussed in your credit note under section 34. Let me see if there are any quick questions. Namita has a question. Section 31 subsection 6 says raise invoice of service performed date of cessation of service. So how it is harsh provision? See, that's what I was saying, Namita. See, I was saying I have rendered a service. 40% service was rendered. Customer was saying that, look, you promised for 100%, only 40% was performed. I'm not willing to pay for 40%. Customer is not willing to pay for the 40% service done. It becomes a bad debt for me. But government says you raise the invoice and pay the tax. Now that is what I was saying, it's a harsh provision. Moving on further, one more question. Sale on approval basis if goods are perishable. Now if goods are perishable, see, you supply before goods got perished. If not, get it back before damage. That is what we have to understand. Durga Rao has one more question. For all B2C supply, customer will not take ITC. Yes, he will not take. That is the reason we report as a B2C. All your less than 200 rupees, I issue one consolidated invoice. ITC on B2C supplies to customer exceeds 2.5 lakh because I have to make a separate disclosure in GSTR 1. It is just a complaint as for GSTR 1. Namita says SEZ need not issue invoice. SEZ unit need not issue. SEZ developer has to issue invoice. If I am a supplier, irrespective of SEZ unit or developer, I have to raise invoice. If the supplier is Wipro, SEZ unit, no need to issue invoice. If the supplier is, say, L&T, who is a SEZ developer, then L&T has to issue an e-invoice. Moving further, camphor delivered by A to B, some quantity evaporate during the transportation. It is called deficiency and I can raise a credit note. It is not his mistake. I can say, look, you promised for 100 kgs, but I got a delivery of only 95 kgs. The 5 kgs, if it is not normal, if it is abnormal, then I have to raise a credit note for that. Now, coming back to presentation, credit note we have discussed, then debit note. Debit note under GST law is as good as a supplementary invoice. Credit note we have understood. Whenever there is a sale return, whenever there is a deficiency, whenever there is a value excess, I issue something called credit note. On the other hand, debit note, when the value has to be enhanced, when the tax has to be enhanced, sir, I have erroneously charged 18% instead of 28%. I didn't know. From 1st Jan 2022, lot of goods, there was a change in the rate of tax. Though the council has recommended to take back, couple of changes are intact. Now, what if, sir, I don't know that I have to raise it 28%, I have billed it 18%. After raise it 18%, but I have billed it 12%. Those cases I have to use a debit note. Or some value was missed out. My purchase order says 22 rupees per unit. I billed it 20 rupees per unit. The 2 rupees I'll raise a supplementary invoice. By debit note is also called as a supplementary invoice. Was there a time limit? Because government is getting revenue, they haven't set any time limit. Whenever supplier wants, he can raise a debit note. Now, moving on to the next concept, we have another 30 minutes, e-way bill under GST law. I'll explain the basic provisions and then I'll come back to the slide to make you understand the provisions. E-way bill provisions under GST law. Now, basic rules when you study e-way bill provisions, basic expectations. 1. Applicable for goods, threshold limit specified, then persons or transactions defined for preparation of e-way bill. 4. Validity of e-way bill. Now, these are the basic fundamentals which we need to understand now. I'll explain you the basic concepts and then we'll move on to the concepts. First and foremost, applicable only for goods. Applicable only for goods. Services, no e-way bill. Most of the time when we do system audit, I doubt how many of you have been doing internal audit electronically. But when you are filing returns, when you are doing the audit before returns are filed, we run this sales report and we run the value and we will see for e-way bill. If there is no e-way bill, we will flag that no e-way bill prepared. Please understand, e-way bill is required for movement of goods. Now, when I say e-way bill is required for movement of goods, please understand. My movement of goods is on account of supply, is not on account of supply. I'll give a classic example. Laptop, Dell laptop I have purchased whose value is 1 lakh. This laptop has got a service to be performed. My head office is in, say, Mumbai. I'm operating as a sales manager in Chennai. From Chennai, my laptop has to go to Mumbai for service related activity. I'll not give it to courier. I'll just give it to the local service fellow. That service fellow take it to the main head office in Mumbai and do the repair activity. Movement of goods. Is it on account of supply? May be on account of supply, may not be on account of supply. Please make a note. All these basic assumptions you need to make a note so that you can understand the provisions. So first provision, first basic rule, when I say movement of goods, need not be on account of supply. When I say supply, a tax invoice is required. Not on account of supply, job work other than supply. That is your gift or the Asian Paints, that painting machine. Now, these are the cases where my movement of goods happen whether or not for supply. E-way bill may be required. Again, only for goods. Threshold limit. Now, not possible for all the moment e-way bill is required. Simple example. Sir, I purchase 10 safety pins. I purchase a stapler worth 30 rupees. I purchase some stationery worth 100 rupees. It is highly practicable, impossible to raise e-way bill for all transactions. The same, I'll define a threshold limit. On the basis of threshold limit, you have to raise a e-way bill. As of now, please understand, 50,000 is a threshold limit. 50,000 threshold limit inclusive of taxes. Now, let me give an example before I move. Say there is a laptop sent for repair. Repair cost, say 3,000. Laptop value 80,000. Composite supply, I'll say yes. What is the principal supply? What is the principal supply? service. Now, please understand this concept, ma. Any doubt, please put into the question window. I'll clarify once again. I have a laptop whose value is 80,000. It has been sent for repair. The engineer, after doing the repair, part of the repair, consumables, etc. is required. Now I call that is a composite supply. And in the composite supply, what is the principal supply? Repair of a service, repair of a laptop, which is a service activity. Now, question number one, point number one. Is there a movement of goods? Yes or no? Answer is yes. What is the threshold limit? Now, when I say threshold limit, is it 3,000 or is it 80,000? What would be your answer? When they have defined as per GST law, if the value of goods is exceeding 50,000, which includes taxes, e-waybill is compulsory for the purpose of movement. So, in this case, will you say e-waybill required? Yes or no? What would be their justification for that? What would be your justification? There's a slight time delay. I'll wait for your answers and then we'll go for further discussion. What would be your answer? E-waybill required, yes or no? If e-waybill is required, whether I complied with that 50,000 value, yes or no? Harish says yes, required. Venkat says no, not required. Namitra says yes, required, value of 80,000. Answer is correct. Namita's answer is correct because the value, now here, the movement of goods is important. Is it on account of supply? Is it on account of service? Is it on account of job work? Is it on account of other? Irrelevant. Movement is happening, goods, yes or no? Answer is yes. Threshold limit is 50,000. What is the threshold limit? For the value of goods. Now here, value of laptop is 80,000. Because the value of laptop is 80,000, which is in the case movement is happening, then answer would be yes, e-waybill is required, considering the value of goods in movement. Now, slightly, if I change this answer this way, the value of goods is 46,000 and GST is applicable at the rate of 12%. Value of goods is 46,000 and GST applicable is at the rate of 12%. Now, if I put that both 46,000 into 1.12, I get 51,520. Now, what would be your answer? E-waybill required, yes or no? The basic value 46,000, including tax, it is 51,000. Answer: my e-waybill time limit, the value what they have given is inclusive of taxes. 51,000 is the value. E-waybill is compulsory. Answer is yes. Now, for e-waybill, they have identified who is the person who has to raise the e-waybill. Supplier is registered, recipient is registered. Supplier is not registered, recipient is registered. Both supplier and recipient not registered. Now all the permutations and combinations, they have analyzed and they have put in simple fashion who has to raise an e-waybill. If supplier is not registered, recipient is not registered, transport is a person who can generate an e-waybill. Alternatively, if the supplier is not registered, using PAN number, also e-waybill can be generated. So point number 3, we need to understand person can be like e-waybill can be done either by the supplier or recipient. Now this point number 3, I'll put it this way. Supply X works FOR or CIF. Now, when we talk about the commercial terms, the moment material crosses my factory gate, I give up my responsibility as a supplier. So e-waybill, why will supplier take the responsibility? Recipient has to generate e-waybill. FOR CIF, till the factory gate of customer, I am responsible. If something happens in transit, if some damage happens in transit, I am responsible. So e-waybill again, I'll be paid. So there is no hard and fast rule that only supplier should raise the e-waybill or recipient should raise the e-waybill. Either of the parties can raise E-waybill. This is my third basic point we need to understand. Point number 4, E-waybill validity. Now, every document has got some time limit for preparation, for updation, for validity. Similarly, there is a validity for E-waybill. These are the 4 basic provisions we need to understand. Venkat says, sir, can you share this Excel? It will be helpful. Yes, Venkat. End of the session, I'll host this on the POC Board of Studies website. You can make use of the Excel file. Yes, I understand your point. It was not required because supply value is 30%. Yes. Now, let's come back to the provisions quickly to understand E-waybill. Yes. The basics of E-waybill. This is a document which enables movement of goods. Which enables means without E-waybill, my movement of goods may not happen. Section 68. Pardon me, excuse me, I am not having that writer, so I have to manage with this mouse. Section 68 is a root mother for this E-waybill. What is section 68 says? When there is a movement of goods in a conveyance for supply or other than supply, along with a tax invoice or a bill of supply, a document or a device is required. I repeat, a conveyance. Conveyance is a vehicle. When there is a vehicle which is carrying goods, why either for supply, other than supply, laptop sent for service, diaries given for gift, some electronic gadgets given as gift. If there is a movement, how in a conveyance, in a vehicle, then that vehicle should have either a tax invoice or a bill of supply or a delivery channel. Along with these 3, a document called E-waybill and a RFID device. This is the expectation which is set under section 68. This has given origination to your E-waybill. And the value we have discussed, 50,000 including taxes. And E-waybill shall be prepared before commencement of movement. Sir, I have sent the goods, later I'll prepare E-waybill. They'll say, boss, you have to raise before, then only I'll approve that. Why? Any fictitious transactions, any transactions which are sham transactions, any bill trading, invoice trading, all those practices will be curbed because of your E-waybill. Now, what happens whenever there is a check post, a vehicle was intercepted, that fellow has to show all the E-waybills carried along with the that vehicle. What if there is a vehicle which goes from, say, Kashmir to Haryana? This vehicle which is moving from Kashmir to Haryana, it says 300 boxes having a value of 10 lakhs. But when there is an interception, when the vehicle was opened, 300 boxes are there, empty. There was nothing in the box. For sham transaction, to have that E-waybill, which is to be registered check post, this vehicle is moving. When the vehicle was intercepted, when physical verification done, E-waybill shows 100 boxes into pieces, say 5 pieces per box, 500 pieces. Physically, 0. Now, that is the purpose they say, before the movement, raise the E-waybill. This is a basic expectation. Moving further. When should an E-waybill be generated? Prior to, before the movement of goods. Now, for what purpose? If it is in relation to supply. What is my supply? Intrastate, interstate, export, import. So if there is a goods which are received from foreign nation to India, I, being the person who is registered in India, I have to generate an E-waybill. So if it is in relation to supply, that is intrastate, interstate, exports or imports, E-waybill is compulsory. For reasons other than supply, that is your sale return, movement of goods, sale return, purchase return, job work, exhibition, line sales, I have to prepare an E-waybill. If it is an inward supply from an unregistered person, I'm a registered person, I'm buying goods from a person who is unregistered, I have to prepare an E-waybill. Now, who should prepare, generate the E-waybill? Assuming, for example, case 1, A, who is a supplier, registered, B is a recipient who is registered. Now, in this case, supplier is registered, recipient is registered. The option is either of them. As I was telling, X works F or CAF. Either A can generate E-waybill or B can generate an E-waybill. Case number 2. In second case, A is an unregistered fellow, B is a registered recipient. In this case, B, who is a registered person under GST law, mandatorily to prepare a e-way bill. Case number 3. A is an unregistered fellow, B, recipient is also unregistered fellow. Now, when there is a movement of goods between A and B, a transporter can prepare a e-way bill, or either of A or B, using the PAN number, they can generate an e-way bill. Now, this is a facility which was enabled on the e-way bill provision, saying that you could be a dealer, you could be a trader who is dealing with exempted goods. Now, one of the exempted goods is notified for e-way bill. That goods alone, you can use your PAN number for e-way bill preparation, or handicraft goods. The other day, when we are talking about registration, I gave an example. If goods are moving from, say, this place called Hampi. From Hampi, the goods are moving to Rajasthan. Or from Rajasthan, the goods are coming to Chennai. When there is a handicraft goods, we have a threshold limit of 20 lakhs. No need to register up to 20 lakhs. In that case, using a PAN number, e-way bill can be prepared. What if goods are sent for job work? Now, I was talking about 50,000 threshold limit. This slide is exception for that 50,000. If the goods are sent by principal to a job worker, and if the goods are moving from one state to another state, I repeat, the goods are moving from one state to another state, interstate movement, irrespective of the value, because it is meant for job work, e-way bill is compulsory to be prepared. Either principal or job worker can prepare. So first exception, examination, these are the slides which they'll ask. There is a movement of goods worth 20,000 for job work from Haryana to Rajasthan. 20,000 is less than 50,000. Now this movement of goods for job work. So because it is meant for job work, interstate, there is no requirement of value of threshold limit 50,000. E-way bill mandatory to be prepared. Next, e-commerce, all this Amazon, Flipkart, eBay, all these transactions. When any supplier who is a small time supplier, supplies are done through this e-commerce or courier agency to a recipient, then this e-commerce or courier agency can have to prepare an e-way bill. Now, handicraft goods, I gave an example. In case of interstate movement of handicraft goods, using the PAN, e-way bill is to be prepared. Next point. When can a transporter generate an e-way bill? There could be transactions where large organizations, they don't want to get into this complaints of e-way bill. Like example, you have this well-established transporter courier agencies. They say, sir, we do end-to-end complaints. We will charge little premium for that. The complaints is much costlier than paying some 5% extra to a service provider. So in case if a transporter has taken a responsibility on the basis of the invoice given by the consignor or the document given by the consignee, if either of them are unregistered, my transporter can generate an e-way bill if there is a movement by road. Now, how to prepare an e-way bill? My e-way bill will be prepared. There is a website called ewaybill.gst.gov.in. This e-way bill has got two details to be filled. Like if you see your application, Aadhaar application, PAN application, or your bank account opening, basic things. Who are you? From where you are opening? What is your contact details? Those likewise for the goods. What is the goods? From where to where? And what is the purpose? These are all contained in part A. Part B. Who is the person who is transporting? Give me the transporter details. So these are the two parts which are there in my e-way bill. So part A, this 9 items which are asked, and part B, the transactions of a transporter. What is the vehicle number and what is the identity number of the transporter? So e-way bill, unless this part A and part B is completely filled, it is not called as an e-way bill. That means I cannot use this e-way bill unless these both information has been filled up. Now, exception to these 2 points, e-way bill, I need not e-way bill I cannot use if both part A and part B are not filled. Exception to that is first exception, it is rule 3. What it says, see generally, if you happen to see this big factories, the transporter come with a small vehicle to pick the metal from the factory. This vehicle go to the transport hub from factory to the transport hub, it goes in a small vehicle, say Tata Ace, Tata 407. At the transport hub, they pull all the material to a particular destination, maybe a 20 feet container. Now, 20 feet container cannot go to all the places to pick the material. So this provision says that in case if the material is picked up from the place of business of the consignor till the hub of the transporter, then this transport details, that is part B, need not be updated. Similarly, one more exception, look, the material has reached the transportation. From transport hub, it went to the destination. So at the destination, from the transport hub, you need to move to the respective endpoints. Again, the 20 feet container, which has come from one location to another location, from there, from 20 feet container, you can put it a small Tata Ace, Tata 407 for making a local delivery. So up to 50 kilometers within the state, you need not update your part B. Now part B is your vehicle number. Generally, when the vehicle is in movement, whatever goods are carried, that vehicle number has to be updated. So this is the exception for your second updation, that is your part B. What if multimode? Like when I say delivery, you see these days, my delivery can happen through air, through road, through sea. It's a combination of these three things. So at any given point of time, my e-way bill should contain the details of vehicle where it is current. It is in train, it is in air, it is in sea, or it is on road. So in case if it is multimodal, if it is movement of goods on road, then what I have to do? I as a supplier, I need to give to the person to whom the delivery is being taken. After I assign to the transporter, when goods are moved from one vehicle to another vehicle, it's the responsibility of the transporter to update the vehicle movement. So one movement to another movement, transporter has to update. So what if it is a multi-mode transport? First, I will give a delivery to the vehicle. From factory, it has to go through a road. So from road, it will go either to air or through train or through a ship. So all these details, again, I'll update on the e-way bill. But one condition, air or transport authorities, they'll not insist for e-way bill. They insist for a tax invoice or a delivery challan. Like from, say, goods have been put into Jammu and Kashmir, Jammu. From Jammu, the goods have to come to Mumbai. So from Jammu, when the goods are taken onto train, if an invoice is there or a bill of supply is there or a delivery challan is there, it is good. At Mumbai, when the goods are picked up by a transporter, they say, along with the invoice, e-way bill is required. Reason? From train, it is being put onto the road. E-way bill is required at that point in time. Now, there is a concept called consolidated e-way bill. What is this? All the e-way bills which are prepared manually, if you see a transporter, when he transports the material, he may have 20 consignments. All the 20 consignments together, one e-way bill is prepared. That is called consolidated e-way bill. Take example. You would have seen this Flipkart, Amazon, etc. The delivery boy who comes for delivery or big basket who come for delivery. In the vehicle, you'll have multiple consignments. So all those multiple consignments, you can consolidate one e-way bill. Means individual e-way bills, you consolidate together called e-way bill 02. Why is that required? For the purpose of verification at the checkpost. Now, having understood the e-way bill, the concept called cancellation. Sir, I have prepared an e-way bill, but I have not used that e-way bill. Why haven't you used? The material was not dispatched. The material details were wrongly updated. So the truck has not come. So any of these three cases, within 24 hours of its preparation, you can cancel e-way bill. Now, this cancellation cannot happen once the goods are dispatched from factory and there was an interception. That means an officer has stopped your vehicle and validated e-way bill. Means once the proper officer has checked on his website this movement of goods, that e-way bill cannot be cancelled. Now, we were talking about validity. For every 200 kilometers, my e-way bill is valid for 1 day. So how do I know? How do I calculate this e-way bill? When you look into e-way bill, there is an automation done. Here, while preparing e-way bill, I need to enter the address details. Once I enter the PIN code of the supplier, PIN code of the recipient, based on the PIN code, the distance is automatically calculated. So what if instead of entering 560050, I have updated 560005? Then there's a mechanism to extend the e-way bill, saying that, sir, there was an erroneous thing. The email distance should be say 180 kilometers. The distance was calculated only for 80 kilometers. I have to give a reason and extend the e-way bill. So if it is a normal vehicle, for every 200 kilometers, 1 day. Additional day is added for every 200 kilometers. So if the distance is for 300 kilometers, first 200 kilometers, 1 day. The rest 100 kilometers, another 1 day. So what if it is a multi-dimensional vehicle? I was talking about this windmill where a 50 feet container is required. The vehicle which has been defined as per the Motor Vehicle Act, saying that it is over-dimensional, means there is a height, there is a length, because not every vehicle can take a cut. This has to go on a specific route, and those vehicles cannot go beyond 10 to 15 kilometers per hour. So for those vehicles, every 20 kilometers they have given 1 day validity. Anything above that, you'll have one more valid extra day. Now, sir, I have prepared e-way bill. Goods are in transit, vehicle has got damaged. What I have to do? Don't worry, extend the e-way bill. Or sir, there was a riot, like example COVID. Sir, I have been transporting goods from say Noida to Tamil Nadu. In between, when I entered Maharashtra border, due to COVID norms, I need not travel. I should not travel beyond 10 o'clock. So I have stopped at the border only in the daytime. Again, weekends curfew. I cannot travel. So because of norms, when I have stopped vehicle at various occasions, I have a choice to extend that e-way bill. How do I extend? 8 hours before the expiry or 8 hours after the validity, I can extend for e-way bill. Now, when I'm extending, they'll ask at which location your vehicle has been stopped. What is the PIN code? The moment I enter PIN code, based on my PIN code to the end destination, they will calculate automatically, and that day grace period will be added back. Now, with this also we have discussed rejection of e-way bill. E-way bill, like your purchase transactions, e-way bill like purchase transactions. If e-way bill was raised on my name, my GST number, which was actually not belong to me, so I as a buyer or I as a supplier, I can cancel that e-way bill. For cancellation, person who prepares 48 hours. If it is the other party who is receiving that e-way bill, 72 hours is the date for cancellation. That is rejection. This exceptions I'll skip for want of time. This CKD, SKD, this part we have discussed duly. This is important. So bill to ship to transaction. In case of a bill to ship to transaction, how e-way bill will work? Examination, expect one question with respect to bill to ship to. Very, very simple model, don't worry. Assuming that there is a supplier called B. B supplies goods to A. A has got a customer called C. So B has to give the material to A. But A, what he says, sir, don't give material to me at my location A. You can give it to location at C, that is the customer. So in this case, there are two invoices. First invoice, B will give to A will give to C. I repeat the transaction once again. I repeat the transaction. Tri-party transaction. Origination is B. In between parties A. End party is C. So the movement of goods is happening from B. So there will be two invoices. One, B will bill on A. Two, A will bill on C. These are the two invoices. So e-way bill can be prepared either by B or by A. So if the e-way bill is prepared by B, who is B? Who is the originating point? So B will say, bill from B's location, dispatch from B's location, bill to A location, ship to C's location. Invoice details, invoices of B will be mentioned. So here, bill to ship to model in the invoice and also e-way bill. I'll say material is billed to A, but at the instruction of A, ship to, delivery to C. That is what I'll mention. Alternatively, sir, what if A has to generate an e-way bill? If A is preparing an e-way bill from where the e-way bill is happening, from where the invoice is happening, from A's location. Dispatch, from where is the material is being dispatched. He'll say, A will say from B's location that material is being dispatched. I don't want to reveal B's location. So I just say pin code, that area and pin code, that is sufficient enough. Bill to, A will say it is billed to Mr. C and also shipped to Mr. C. Invoice details of A will be populated. So examination, expect one question for bill to ship to model. Consequences of not preparing an e-waybill. So what if I don't prepare an e-waybill? 10,000 is a standard penalty or amount equivalent to the tax, whichever is higher under section 122, there is a penal action. So what if there is a movement in transit? There is a section 129 where we have a separate session. I think Vignesh sir is going to cover with that section 129 penal provisions. At length, Vignesh will discuss on e-waybill provisions. Now, documents and devices to be carried as per the law, as I said, section 68. Whenever there is a movement of vehicle, tax invoice, or a delivery challan, or a bill of supply, along with these three, e-waybill is compulsory. In case of imports, my bill of entry and e-waybill have to be given. So what if these documents are electronically e-invoice? No need to carry physical documents. E-invoice is good enough for showing these documents. Next, verification. So once the goods have been intercepted, say in a state, like goods are moving from Haryana to Tamil Nadu. Once the goods have been stopped in the state of Haryana, again, in no other check post, until and unless there is a intelligence information, the vehicle will not be stopped. So this rule 138B says that whenever there is a movement of vehicle, once the state, it has been intercepted. So once it is physically verified in any other state, till it goes out of the state, it need not be verified until and unless there is a exception news that there is a smuggling or evasion happening on that particular thing. Inspection and verification, we have discussed. Once the inspection is done, there is a report which needs to be done by the officer. This is important. Restriction on furnishing of information. Now, most of you, I don't know how many of you have filed returns. We are at 9:1. I'll take another 2 minutes. Just bear with me. We'll wind up. Under GST returns, if you generate an e-waybill, e-invoice gets rejected. My e-invoice will not auto-populate to my GSTR one. If I raise an e-waybill, it says the registration has been cancelled. So in case if the supplier or recipient has been default, how they have to pay tax under section 10 composition, they haven't paid for 2 quarters, then e-waybill will not be permitted to raise on their name. What if a person other than composition who has not filed returns for 2 tax periods? Again, e-waybill is barred from generation on their name. If GST1 is not filed for 2 quarters, again, e-waybill will not be permitted. Based on this blocking, if there is like I'll rectify my returns, I'll make an application to the officer, then the officer will invoke my e-waybill unblocking. So this is the provisions which are connected with e-waybill. Detailed discussion on section 129, Vignesh sir is going to cover separately. So students, I'll stop my discussion at this point in time. Any doubts, I'll take up in the next session for paucity of time. See you all till then. Stay safe and good night.